stockpiles vaccines or develop new technologies. The Department of Health and Human Services is asking for $30 billion to prepare for new waves of the virus. The Internal Revenue Service is adding a second so-called search team to expand its capacity to process U.S. tax returns. That comes after criticism from members of Congress who say taxpayers are waiting for months to get their refunds. The IRS is also outsourcing some functions to help finalize returns more quickly. A big transaction in the chemical industry. Celanese has agreed to buy most of DuPont's materials business for $11 billion in cash. The deal includes a global production network of 29 facilities, including compounding and 5,000 employees. And shares of Hermès are falling today. The French luxury goods maker reported lower revenue from its leather goods division, which sells the Birkin handbag, and could not keep up with demand for its products. Normally, Hermès gets half of its revenue from those leather products. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Isn't it, just how sensitive the markets are to any commentary about trade? We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
York City. We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Our information indicates clearly that these forces, including ground troops, aircraft, ships, are preparing to launch an attack against Ukraine in the coming days.
Secretary Blinken dropping by New York at the UN on his way to Munich with some strong words for Russia. The Russians continue to deny any plans to invade Ukraine. The headlines continue to whipsaw this market with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your market's up this morning. Good morning, up 0.4% on the S&P off the back of headlines overnight that Secretary Blinken will meet with Foreign Minister Lavrov in Europe next week. That's enough to lift sentiment for now. A bounce back on the Nasdaq. We were down 3% yesterday. We bounced back 5 or 0.6%. Yields essentially unchanged at 197 on 10s, 196.68 if you like the extra decimal places, Tom. I know you do. Crude down 2 percentage points to 89.84.
We go to 4 digits. That's what we do. What we're doing on a Friday, folks, is resetting you here. We've had some home data coming out later, and of course the market data. Look seriously for John's The Real Yield this afternoon, which I think will be timely amid all this news. We move from Elizabeth Economy of Hoover with Seth Jones of CSIS to join us in a bit. And right now, we are honored to bring you Robert Horbatz, Ambassador Horbatz with Tiedemann Advisors, I should say, in his work within various Republican and Democratic administrations. He is tarred and feathered as a member of the Clinton clan, but what you don't know is Horbatz has 11,200 pages, 5.6 linear feet in the Gerald Ford Library from his work with President Ford years ago. We're thrilled that Bob Horbatz could join us this morning. Bob, I look at your work over time, and I want to go back to you as a newly minted freshman at Tufts University, and there was a small matter of the Cuban Missile Crisis only years before to save face.
Well, I think if there's a way that Putin can save face, it's to recognize that the Russians, as Angela Stent has said, have a deep historical affinity for Ukraine. I mean, it's very closely connected to the Russian Orthodox Church. A lot of Russian and Ukrainian history are tied up with one another. And Russia perceives that it has a right to have an influence, if not control, over Ukraine. It's part of Russia's notion of having an expanded influence in the new era, just as the Soviet Union did in that region decades ago. I think that the thing that he wants probably most is a very clear indication, if not a firm commitment, that Ukraine will not join NATO.
How do we thread that needle? That's critical. How do we do that when the secretary says we want an open door policy?
I think you can do it in the way we've done it in the Middle East, in a curious way, and that is you're not definitive about it. You simply say there are no plans and no immediate plans and no medium-term plans for Ukraine joining NATO without giving up the right of the Ukrainians and of NATO to bring Ukraine into NATO at some given point. So you don't make a definitive commitment not to have Ukraine in NATO, but you make it very clear that there are no plans in the immediate future to do so. Ukrainians have more or less said that, and NATO has more or less said that. And that enables him to go back to his people and say, look, this is not going to happen anytime soon. Don't worry about it. It's probably not going to happen at all without us giving up the right to have it join if it wants to.
Bob, based on the diplomatic tea leaves that we're hearing out of all sides, does it make sense to you that there is relative complacency in the oil market?
No, it does not, because if there's any small chance of an invasion, and Tony Blinken has more or less said that he thought there was a high probability, that would be very disruptive of the oil and the gas markets both. Russia's a major supplier. the pipeline, at least one of the two pipelines, would probably be shut down. The notion that we would sell oil or gas to Western Europe in an inflationary environment already in the United States should be concern enough to be wary of what oil prices would do in the event of war.
Well, but there is this argument that Russia does not want that Russia wants to maintain its dominance over oil supply and gas supply to Europe. How much does that become an overly factored in aspect at a time when Vladimir Putin definitely seems like he has a point that he wants to make?
Well, that's one of the dilemmas Russia has at this point, and that is Russia clearly wants to be a major supplier of gas and oil to Europe, and a war would disrupt that quite severely. So when Putin makes his calculations about whether there should be a war, he's going to have to look at the Russian economy, which is in no great shape at this point, and recognize that the oil market, which is key to the Russian economy, and the gas market, particularly oil, is key, and that would be disruptive, and that would send a very negative blow to the Russian economy, which he wants to bolster. So he can't really have it both ways. If he wants to have a war, he's going to have to suffer severe economic consequences, and those would come through disruption in the oil market.
Bob, brilliant and tremendous to have you on the show with us, as always. Bob Hormats of Tiedemann Advisors. Just getting some headlines from the US envoy to the so-called OSCE, the Organization for Security and Cooperation in Europe. The US envoy to the OSCE saying that Russia personnel was 100K on January 30th. That number is now 169 to 190,000 personnel near the Ukraine border. Tom, interesting how they define personnel. Personnel includes troops, the National Guard, and separatists as well. So according to the US envoy, Tom, that number has gone from 100,000 at the end of January to somewhere between 169 to 190,000.
In the nuclear effort this weekend, where they're going to be going through drills, which are normally scheduled, these are not unusual drills, I'm told. But the difference, John, is these drills this weekend, where Mr. Putin will attend or view, I should say, also include their Black Sea forces, their Black Sea Navy. So it's an overlay of what you just said in terms of personnel, and then in the weekend, what we're going to see in terms of missiles and also the Black Sea.
Lisa, it's a really tense time. At the same time, we've got all these headlines about a troop buildup, all these headlines about the potential for an imminent so-called invasion. The Russians continue to deny any plans whatsoever to do any of the above.
And that's why I wonder why U.S. keeps giving more and more specificity with its intelligence, basically saying, look, don't trust them. And again, this goes to the information wars and the difficulty of gaming out just what exactly is happening and how much is trying to sort of tip the needles on a scale that is not necessarily military.
Lisa, we've got to ask an important question, and I can say this to you with respect for Fargo. John, have you ever shoveled snow in a driveway?
Yeah.
Have you ever done that?
Of course I have. Yeah, of course I have.
There's snow in Coventry. There's 6 inches of snow in Ireland. And I just said to myself, Pharaoh's never done that.
I've done that a few times, Tom, I promise you.
Okay, 2 or 3
I've broken a few shovels too, just getting too aggressive with it.
That's shocking.
Shocking.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This Fed does want to speed things up in a meaningful fashion.
There's a real risk that the Fed is about to embark on a policy mistake.
What the Federal Reserve is trying to grapple with is how quickly to get back to neutral.
It's all about the Fed's mandate.
The Fed has made it clear that they're playing catch up and March is a given.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
One more day. We're almost there. Long weekend in America coming right up.
End of the year, right?
Almost there, TK. Not quite. Futures up 0.4% from New York City this morning. Good morning. Good morning. Whipsawed by headlines over the last couple of days, TK. The latest headline driving this equity market. A meeting next week between Secretary Blinken and Minister Lavrov.
I did a lot on Europe here in the last hour with Elizabeth Economy, Robert Hormats, Seth Jones to come up as well from CSIS. But, John, I really do think we've got to get back to surveillance first principles, which is a total mystery of what 47 Fed speakers will say in the next 24 hours.
And some important Fed speakers as well, Tom. Brainerd, Williams, I think front and center, the core of the Federal Reserve today. Can they set the tone? Can they get hold of the narrative? Well, we talked about President Mester. She's talking about backloading rate hikes if we need to. President Bullard is saying let's front load them. We need to right now.
I'd suggest a mathematician from Cleveland has an immense respect for her steadiness. John Williams is far more controversial, John Farrow, in what he can say or do, and particularly wrapped around where that terminal value is. It's wrapped around his core research, his acclaimed research, I should say, of R-Stard.
And Alan Zentner over at Morgan Stanley, you might have missed this one.
I missed
late yesterday, moves to 6 rate hikes for 2022, Lisa. That has quickly become the epicenter of the calls right now. All grouping around 6 or 7, 5, 6 or 7 for 2022.
Right now, if you look at Fed funds futures, 6 rate hikes are fully baked in through year end. Or is it really baked in, though, to market valuations? Because if it is, does that give the Fed more ammunition to go even faster, saying that right now what you're seeing is not enough of a financial tightening to really slow inflation to the degree that they'd like?
What happens if they don't? Matt Hallback of Morgan Stanley, for me, says something that really got my attention. If they don't deliver what the market is priced for, that amounts to an easing of monetary policy. That amounts to an easing of monetary policy. And then he said, Lisa, an easing of monetary policy right now is the last thing we need.
I would agree with that. Basically, that markets are expecting them to move 25 basis points. That is the base case in March, and then to signal more rate hikes throughout. If they didn't do that, that would be a mass easing. That would be a tremendous surprise. And frankly, a lot of people are saying it would be a sell-off.
Tom, would you like to do handbags now or handbags later?
No, I think it's
or later?
We can do it now. I mean, I think perspective is important, John, and we do this. I mean, David Bianco's important, and we're going to go on to that. But very quickly, John, Hermes, tarred and feathered today, fine.
Down 6%.
Okay, but you go back and you look at the sales versus pre-pandemic, and they did better than good. They raised the dividend. They said, you know, things aren't bad, and we're hearing that from a lot of companies.
They can't find the staff to make the goods. Don't you think that screams exclusivity, Tom? They seem to be okay with the idea that some of their goods trade at a premium in the secondary market, and that in the primary market we want some scarcity, we can't find the labor, because our staff, when they make our goods, they are so tremendously qualified and well-trained, Tom, that they only can make so much, and to replace them is tremendously difficult.
Look, each of these shops is different. I happened to be in a store the other day that I believe the Louis Vuitton company is picking up.
Is that how it's pronounced?
Yeah, I think so. And they're all different, and they're all the same. And the answer is there's a gloom structure set up, and the fact is they're doing really well.
And let's be clear, they're not doing a Chanel, Tom. Chanel last year, as you know, price hike, price hike, price hike. I believe so.
I've been saying channel.
You've been
for
saying
years.
channel.
For
how long?
I'm sorry.
That'll get you in trouble, Tom.
Yeah.
You want to weigh in on this, Lisa? Or you want to let this slide?
No.
Bonds, yields?
Yeah, let's look at markets.
The yields unchanged, 196.
Thank you.
33 on 10s. Let's get back on track. Thanks for letting us go, though, Lisa. We appreciate that. Tom and I were really looking forward to talking about Hermes. Up 0.4% on the S&P, just a little bit of a bounce here off the back of yesterday's big move lower on the Nasdaq. A bounce on the Nasdaq 100 by 0.6% as well. And Lisa, the move that's got your attention, Tom's, mine, and our audience too, 89.94, a break of 90 on WTI.
You know, it doesn't make sense if you buy into escalating tensions, or is this just a trade as people try to cash out of elevated valuations? What I'm watching today, the Munich Security Conference kicking off. It goes today, it goes tomorrow. We're going to be hearing from Tony Blinken, Secretary of State of the U.S., as well as Ukrainian President Zelensky and Kamala Harris, the U.S. Vice President Olaf Scholz of Germany. What are they going to say about the conflict? How much of a buildup in NATO troops are they going to support in order to counter potential threats from Russia? Today, as you mentioned, John, we do get a slew of Fed speakers. To run you through the roster, at 10:45, Chris Waller, Fed Governor, and Chicago Fed President Charlie Evans are speaking. At 11 a.m., John Williams. This is going to be really important to listen to. New York Fed President. Does he give any guidance about front-loading versus back-loading? You really highlighted this point, and honestly, to me, this is the issue. Do they feel confident enough with the numbers they've seen that they need to try to get ahead of it, or do they need to see whether there is a sort of, not transitory, but at least a waning effect as some of the base effects come into play? And at 1 p.m., you get, 1:30, excuse me, Lael Brainerd is going to be speaking, Fed Governor. How much does she weigh in? Is there agreement between John Williams and Lael Brainerd, creating a core and creating a narrative that they have more control over? And at 10 a.m., you get existing home sales. To me, this is going to be interesting because we're expecting a decline. Basically, it's just simply there is not the inventory. Does the higher mortgage rate really matter? Mortgage rates have risen to the highest since 2019. Does this factor into demand for housing, or is housing somewhat immunized from the mortgage rates given how much cash has come in, and frankly, given the institutional demand, looking for a place with steady income, rents that keep going up, John?
Lisa, thank you. Tom, I know you want to weigh in on something. What is it?
My issue here is our next guest, David, is maybe the guest I hate the most, because every time he writes, I have to read the whole damn memo. I hate him with a passion.
You hate our next guest?
Yeah.
Thank you.
Thank you.
He
writes brilliant essays.
Is that our introduction to David Bianco?
That's you have to read the whole note. It's not fun.
America's CIO at DWS. David, I'm going to start with Bank of America, just to wind you up even more. Recession risks are rising. We remain bearish on tech, stocks, and credit. The next 6 months, a rate shock morphs into a recession shock. Michael Hartnett over at Bank of America. What's your response to that, David?
Well, always say hello to my former colleagues at B of A, and I'm glad that Tom reads my notes from beginning to end. I try to go from provocative titles all the way to deep analysis and exhibits to support what I say. But look, B of A raises a very good point, which is a point on all investors' minds right now. We're wrestling with it at DWS as well. That's how long does this cycle last? What's the longevity going to be of the expansion that we're currently in? And this cycle got old fast. It got old really fast. It was aged badly by inflation and things like the lingering scarring of the pandemic, but also demographics, also regulations, and now these geopolitical tensions. These are things that are exacerbating the inflation risk. And it's something that's making us ask a serious question. There could be a recession in 2023, and this could be a very short-lived cycle. And that is something investors need to appreciate, that although we're only 2 years into this expansion, in inflation-adjusted years or dog years, we're probably 7 or even 9 years biologically aged. In U.S. expansions, well, the record's 11 years, but getting to 10 years is a full life for an economic expansion.
This sounds pretty bearish. Why are you still bullish on stocks?
Well, in part because of where stocks are right now. And we'll keep an eye on whether we go into proper correction territory. It's a very tense market right now. There's a lot of anxiety. This will be probably a tough Friday, given all the risks that are out there in Ukraine. So, our view is that the S&P 500 will eventually get to 5,000. But we always pointed that it was not likely to be at 5,000 in the first few quarters of 2022. This inflation needs to come down. We see signs of deceleration, but we have yet to see signs of disinflation. So 5,000 is a reasonable number for a year or maybe 18 months out from now. But for now, I would argue that the S&P belongs under 4,500.
David, just quickly, Citi just published more Fed speak, less Fed guidance. That's been a story for a lot of people. Just to interpret that a little bit differently, we've heard from them a lot. I haven't really heard much, though, on guidance for the year ahead, the size of the balance sheet reduction. David Bianco, what's guiding you right now for the Federal Reserve? And who are you listening to and who are you choosing to ignore?
Well, we listen to all of them, and also we're listening to the potential future appointees to the FOMC. So, look, I think there's a lot of uncertainty out there. We're trying to get all the views, but the uncertainty really pertains to inflation, and the latest fuel to that fire is oil prices. And, you've heard Fed speakers say things about the supply chain, and they can only do so much on the demand side. The supply chain needs to respond. Right now, I think what we need to hear from non-Federal Reserve policy setters is what's going to be the energy strategy if there is conflict in Europe. And I think allies like Saudi Arabia, and maybe doing a little bit more cooperation with not quite an ally, Iran, and then also turning to U.S. producers. Those are the three spears that need to be used in order to make sure that Russia is not successful in using energy as a weapon.
David, thank you, sir, for your input, your insight, as always. We all read it. I happen to enjoy reading it. So does Lisa. Tom, I don't know what's going on with Tom. I never know, David. Thank you, sir. Up a 0.5% on the S&P this morning. Good morning to you all. Stand across the single names as well. Deere raising their profit outlook a little bit earlier this morning. Tom, what are you looking at?
Oh, I like Deere. I mean, Deere up nice is great. Let's go off the Super Bowl. DraftKings really disappointing some people out front. And I'll be honest, John, the sell side was not in love with DraftKings, and they're down 16% right now. It's just simple. They're missing. That's all you need to know.
And down hard. With Tom Keene and Lisa Bramett, I'm Jonathan Ferro. Futures up. We're doing okay. Up 0.7% on the Nasdaq 100. Yields unchanged at 196.50, and crude pulling back by more than 2%, 89.90. With Tom Keene, Lisa Bramett, and Jonathan Ferro. This is Bloomberg.
Keeping you up to date with the news from around the world with the First Word News, I'm Leanne Gerrans. Russian Foreign Minister Sergei Lavrov will discuss a crisis in Ukraine with U.S. Secretary of State Antony Blinken next week here in Europe. Their meeting was set hours after President Biden warned that the chances of a Russian invasion of Ukraine were still very high. Moscow has denied it is planning an attack. Cleveland Fed President Loretta Mester supports tightening policy at a faster pace if needed to fight inflation. In remarks for a virtual event, Mester said it will be appropriate to raise interest rates next month and speed up the pace if inflation is not moderating. Mester said she expects inflation to remain above 2% both this year and next. It is the biggest acquisition ever for Celanese. It is buying the majority of DuPont's mobility and materials arms for $11 billion in cash. Celanese will acquire a broad portfolio of engineered thermoplastics. DuPont CEO Ed Breen has turned the company into a business focused on electronics, automotive, water and industrial technologies. Now, the largest maker of farm machinery, Deere, has raised its outlook for the fiscal year. A boom in crop earnings keeps boosting farmers' demands for the company's iconic green tractors. Deere said it has been able to work around the global supply chain crisis. And a giant cargo ship carrying almost 4,000 vehicles from Volkswagen Group has caught fire and is adrift near the Azores Islands in the Atlantic. The ship's 22 crew members have been evacuated. Among the cars on board are luxury models including Porsches, Audis and Lamborghinis. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Bloomberg.com webinars.
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
They're sinking big time.
You can't do better.
Bloomberg breaks the numbers first.
PepsiCo has given a sales outlook that beat estimates.
It's Peloton.
Disney and Uber.
Pfizer also out with earnings.
An expert analysis you won't get anywhere else.
This is fascinating.
What is going wrong for Meta that is going right for Twitter?
How much runway is left?
Peloton really becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
We will never give up on our sovereignty. We will never give up on our territorial integrity. We will never give up on our Euro-Atlantic aspirations. But how to bring peace and how to stop the ceasefire, we are ready to discuss.
Brilliant conversation yesterday with Oksana Markarova, the Ukraine ambassador to the US, sitting down with Bloomberg's Anne-Marie Hordern in D.C. From New York City this morning, equities with a lift by 0.5%. The tone helped out by a meeting scheduled for next week between Minister Lavrov, the foreign minister of Russia, together with Secretary Blinken. Your market gets a lift. Yields are unchanged at 196.68. Crude's lower by 2 percentage points at 89.79. And if you're in the UK right now, I hope you're watching this, 1, listening to it, 2, or 3, Tom, experiencing what is happening at London Heathrow as Storm Eunice is about to crash down into the UK. Winds are high. We're expecting something north of 100 miles an hour. And people are watching A380s just come into land at London Heathrow, Tom, with the wind just whipsawing them. The skill of these pilots, Tom, is something else.
It is. I talked to a pilot once in line at LaGuardia, John, about the big turn they make over the Old World's Fair. And I said, what do you do? And he said, we try to land safely.
They're landing safely. Tom, these winds are quite something.
Really something.
Watching these planes come down too.
Yeah. We're going to do a shout out to Big Jet, who's given this worldwide to everyone to watch, with Emirates safely landing there with, as John mentions, a lot of skill. Also with skill is Emily Wilkins at Measuring the Tea Leaves in Washington, and Maria Tadeo, who hasn't slept in 3 days in Brussels as well. Maria, what is in your reporting that's not within the zeitgeist? What is the thing about the weekend that we need to know?
Well, it's about Belarus. It's back very much again in the picture. And all of this, as you know, yesterday, Lukashenko, who's still the very questioned leader of Belarus, he said yesterday that he is willing to speak to Vladimir Putin again and that he would be willing to host, if necessary, in Belarus, which is the fastest way into the Ukrainian capital, nuclear weapons. So that is an escalation from anything that we've seen up until now. A country that is so close to Ukraine saying, if Vladimir Putin asks us to do this, if he wants us to do it, we could host nuclear weapons. This is very different to anything that we've heard from the Russians, but it's also very much against what NATO is saying and they want to see, which is de-escalation on the Western Front. And today, Tom, I spoke to an official from Lithuania, and he told me we should all be paying attention to Belarus. Lukashenko is a puppet. We know that, but he is a puppet with weapons, and that's dangerous.
What does Brussels do? What I see is the Putin rule playbook, I should say, which is to go bilateral and not multilateral. You are bathed in multilateral in Brussels. How powerful or how important is Brussels this weekend?
Well, it is, because we know that everything is being done in unity up until now. I'm surprised myself to see this level of unity, frankly. We're seeing the United States, NATO, the European Union, all of them working together. We have a phone call that is happening today with the European leaders and potentially also President Biden. So all of this is happening in unity. And in fact, yesterday an official told me this is the thing that Vladimir Putin misread and miscalculated. He really believed in divide and conquer. But so far, that is not being the case. Everything is working together, on paper at least, and the Europeans are saying we want to work very closely with the United Nations and the United States, by the way. And if there is to be an invasion, Vladimir Putin is going to see, quote, the mother of all sanctions.
Anne-Marie, given the fact that we do have an escalation, perhaps, or excuse me, Emily, the fact that we do have some of the tensions that do seem to be abating, does it make sense to you, based on your conversations, for oil prices to be coming in for this deep sigh of relief and the sense that there's a diplomatic win that's in the wings for the U.S.?
Well, I think to a certain extent, oil prices are still a major concern for the Biden administration, a major concern for Democrats. You've seen senators who are going to be in a very vulnerable spot this November already put forward a proposal to eliminate the federal gas tax. Now, that doesn't seem to have enough momentum to actually move forward at this point, but the fact of the matter is that they're thinking about it. And Biden did warn. He said if Russia invades Ukraine, that could mean more for energy prices, more for gas prices. So if that does not happen, certainly that does wind up being a positive to the American consumers, but certainly the international is only one component of what is going on with the oil and gas market right now.
Emily, is there a sense that the U.S. would be willing to add money to the military budget and add troops to the region?
I think there's definitely a sense that the U.S. does need to have a strong response here, particularly with our allies in the region. I think it's a good question of exactly what that winds up looking like. The U.S. has already sent troops. They've already sent military items over to the area. They've talked about their support and their backing of this. I think we're going to be seeing a lot more in the coming days as you see the diplomacy get underway, again, with Blinken talking to Sergei Lavrov, with Secretary of Defense talking with his counterpart, with Kamala Harris being in Munich, speaking with her allies in the European region, as well as Ukrainian President Volodymyr Zelensky. I think these are all discussions that are going to be continuing to happen and will kind of guide what the U.S. decides to do in the coming days and weeks.
Emily Wilkins, Maria Tadeo, thank you both. The tone shifts just a little bit. It's enough to lift this market up 0.5% on the S&P. Tom, does it stick? Does it stick? We're just whipsawed by headline to headline at the moment, aren't we?
The earnings story is there, and it seems pretty good, but it is about the headlines. As you mentioned, the latest headlines on Russia personnel on the land in Belarus, as Maria Tadeo talks about. And John, this Munich Security Conference is actually a big deal, and I would point out, I got an online invitation to the Munich Ukrainian Lunch, the 5th annual lunch, and among other worthies, General Mattis will be there to give perspective.
It's tense at the moment, Lisa. Claims and counterclaims dominated the price action yesterday. Just the idea that we have a conversation lined up between the foreign minister of Russia and the Secretary of State here in America, just enough to lift this market for now.
Does it make sense to you what oil is doing? I mean, really, if you take a look this week, work it out. That's your take?
I can't work it out.
I can't. I'm not understanding the pace that people are basically saying that it's going to be resolved. But if it's not resolved, I mean, some of the estimates that we've heard of how high crude could go, it doesn't make sense that there seems to be this complacency unless this is people cashing out of their bets and just trying to hold on to some cash ahead of whatever's going to happen.
I also really don't have the spare bandwidth to work it out myself, Tom, because I'm distracted by Big Jet TV on YouTube at the moment. The official reviews in from the Financial Times, Tom. Katie Martin saying that Big Jet TV is officially better than the Winter Olympics.
Well, they got
your
more
hooks.
people
I know
watching.
exactly what you're doing right now. Exactly what's on your screen. You're watching it too.
Yeah, 133,000 people on YouTube. And John, this speaks to the reach. You know, the new digital reality of
totally.
YouTube. It really speaks to the immediacy.
There are 133,000 people, Tom, watching Big Jet TV on YouTube, which is just planes coming into Heathrow, landing as Storm Eunice.
We should say it
It's
made
the
a high
country.
wind, and it's absolutely spectacular to see how they shift there with the Boeing and Airbus plane.
What are the commentators? Yeah, come on, mate. That was mad skills. Nice one.
Is that your impression of someone in the UK? Was that it?
No, that wasn't.
Yes, it was, wasn't it? That was it. Futures up 0.5%. Mad one. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
A Bloomberg subscriber just wrote in and said Lisa's accent, her English accent, is more authentic than mine. Apparently it was better, Lisa.
Oh, yeah?
Keep
Let's
it up.
give it a try. All right.
Maintain it.
Mad skills.
Beautiful thing, mad skills. Futures up, 0.5%. I don't think I've said that for about 15 years, maybe 20. Futures up on the NASDAQ too. Yesterday down about 3%, a bounce back here by 0.6%. Yesterday evening, a scheduled meeting for next week between Minister Lavrov and Secretary Blinken, just enough to settle things down a little bit, and lift the tone. The sentiment improves in the equity market. In the bond market, as you were, 2s, 10s and 30s, 10s unchanged. Your 10-year looks like this, 197, yields up by not even a single basis point. Similar story on 30s at 230, just south of that, and sub 150 still on a 2-year at 149. It is time for the core of this Fed to get a hold of the narrative for what to look for next month and beyond.
The chairman's got to speak.
Williams and Brainerd front and center. That's an important step forward to have the core of this Fed at least make their voice heard about what to expect here. Because at the moment, TK, front-loading, back-loading, front-loading if you're President Bullard, backload the rate hikes if you're President Mester. It's very difficult to get your hands around on what to expect. Now, Tom, maybe that's a feature and not a bug, I don't know, because they are not prepared to define the path forward from here.
We should explain this as Brainerd is the presumptive vice chairman. Brainerd is someone with first-rate economic skills, but not so much around core monetary theory. That's not the case with Williams, John, out of the New York Fed, and with a special voice from the New York Fed, is considered a first-rate monetary theorist.
And we haven't heard from him or them for a while. CPI was hot, PPI was hot, retail sales were decent, at least at first look. That's the story so far. Yields settled down. Unchanged for the most part through the curve. Finish on this, though, the surprise of the week. The biggest weekly loss potentially for crude of the year so far. WTI is negative by 3 percentage points on the week. We bounced back a little bit, similar move on Brent as well. Tom, fascinating conversation, just tremendous interview yesterday with Katie Lyons, Guy Johnson, and the head of Pioneer, who basically turned around and said, I don't care if it's 100, 150, 200. This time around, we're going to be so much more disciplined about drilling for more crude.
John, go to Romaine, please, because the big one's landing at Heathrow.
You watching Big Jet TV still? I can tell you we're distracted.
Big one's landing right now.
What's the big one? We got another A380.
I don't know. It's like a Boeing something. It's maybe a 747. I don't know. It's ginormous.
You just focus on that.
Okay, thank you.
Cruise right now, 1920. Let's get you some single names, some movies.
Good morning,
Good morning from Romaine. Good morning, Romaine.
Hey, good morning, John. We'll give Tom a little bit of a break here. Keep an eye on, of course, the big cap tech stocks. We've been talking a lot here about the drawdown slowdown that we've had in this market. And I think yesterday was a reminder that a lot of these big cap tech stocks are still mired deep in correction. Of course, both of the NASDAQ indices in correction here. And you're seeing a lot of those big cap FANG names, the one that sort of led us in the last bull market cycle, really falling out of favor. Netflix, one of the biggest drops, one of the biggest drawdowns that we've seen. And now Facebook down more than 45% from that all-time high. And more importantly, now dropping out of the top 10 with regards to the rankings of the most valuable companies by market value out there here. It'll be interesting to see what the next leg up is here for this company, and more importantly, whether investors are going to buy into the story that Mark Zuckerberg is selling with this pivot to the metaverse here. Intel also trying to sell analysts here on its strategy going forward. Pat Gelsinger, he had an investor day yesterday basically saying we'll get about 2% in revenue growth this year, and then that should accelerate to the mid to high single digits in 23 and 24. Unfortunately, most of the analyst notes out this morning are pretty skeptical of that, at least one calling it absurdly bullish here. And then DraftKings shares taking a leg down here, down 17% after coming out with earnings. The platform, user growth on that platform coming in a little bit lighter than what the street was expecting. Flip up the forward a few M&A things to keep an eye on here. First up is Pilgrim's Pride. Remember, JBS was supposed to buy out the rest of this company. Pilgrim's Pride shares down about 15% right now as JBS is said to have walked away from that deal. It's not quite clear why. They just said a special committee meeting didn't go as planned. We do know that there was a lot of regulatory pushback on this deal. DuPont also higher here on the day, up about 5.5% after agreeing to sell off one of its polymer businesses to Celanese for about $11 billion. And Virgin Galactic, which of course went public about 2 years ago through a SPAC that run by Chamath Palihapitiya. Palihapitiya stepping down from the board, giving up the chairman role and stepping down from the board altogether. Tom, are you done?
Romain, thank you so much. Just what I just saw there, folks, and this goes back to the aerospace. John, I just saw a major flight from Qatar Air abandon the landing. I can honestly say I've never seen that in my life. Came in above the runway, couldn't do it, lifted up and turned left with wheels up.
Oh, Tom, in all seriousness,
absolutely extraordinary.
I mean, right now we're talking about immense skill from some serious pilots coming into Heathrow. And for anyone in the UK right now experiencing these winds, I'm speaking to my family at the moment, stay safe, Tom. Falling trees, all of the above. It's tough out there at the moment.
It's very, very important. I want to be very careful. I don't want to name the flight of Qatar Air, but it was really extraordinary to see, and we thank Big Jet for helping us stay on that on radio and television worldwide. Right now, Colin Martin joins us, fixed income strategist at Schwab Center. Colin, I'll be direct. Short-term duration's done. You want to go out. What is the strategy to get away from the addiction of being in the triple leveraged all cash fund?
Well, we think it makes sense to not abandon short-term holdings, but at least consider extending out a little bit further on the curve. Coming into this year, we thought yields could rise a little bit to the 1 3/4 to 2% level. I'm talking about the 10-year Treasury yield, and we're there now. And we haven't really changed that outlook just yet, even with the 10 close to 2%. When you look at the outlook for Fed policy expectations for the terminal rate, it's not much higher than where the 10-year yield is right now. So what we're telling our clients is you should probably start considering extending out a little bit. Yields are up. Yes, they're below where they were. What a lot of investors consider, historical norms, say pre-financial crisis. Right. But you look in the post-financial crisis era, they're not too far from where we were, for most of the last decade.
But the real yield isn't there. As John goes to his important program after 12 noon, negative 0.49 on the 10-year real yield. Where's the yield value?
Yeah, real yields are still negative, and that's a risk in the tips market. If you're an investor considering nominals or tips right now, over the short run, we do see a bit more risk with tips. A negative real yield is just too low in our opinion. We think it should at least be 0 or a little bit more positive. But a risk is when the Fed shifts to QT and starts shrinking its balance sheet. The tips market is a less liquid market. And as they pare back their purchases, we see the risk of real yields rising a little bit more than nominals. So over the short run, we think tips investors can be a little bit disappointed, as they already have this year, with tips returns underperforming nominals.
Colin, do you think that credit markets have accurately priced in 6 or 7 rate hikes this year?
Probably not. If we do get 6 or 7, I think spreads would likely widen a little bit from here. So far, the movement's been relatively modest. I mean, spreads are up pretty sharply for the year, but I think that's because spreads were just so low. We were at multi-year lows back in the middle of 2021, and it was just logical for spreads to rise. If we got a severe and sharp tightening like the markets are expecting, I think yields could rise a little bit from here, but we're not expecting a surge. That's been our base case coming into the year. We're cautioning more about volatility and less about this, sharp underperformance with things like high yield bonds or bank loans. I mean, so far they're outperforming IG credit and preferreds for the year. That's mostly based on duration, and they're only underperforming treasuries by a little bit, which to us shows that the risk more is with interest rate risk and less about credit risk right now.
Which is interesting because a lot of people are starting to worry about recession risk, and you would expect those credit spreads to widen even more if that really were the issue. This is really the key debate right now. Can the Fed affect a 6 or 7 rate hike regime in 2022 without spurring some sort of bigger economic weakness? And frankly, if spreads do not widen, where is the transmission mechanism for that weakening? So at this point, what's giving you confidence that the economy is strong enough to withstand 6 or 7 rate hikes this year without a recessionary environment that would cause those spreads to widen? It's sort of a circular kind of idea here.
Well, we're not in the 6 or 7 camp, so that's part of our rationale. We're in more of the 4 to 5 right now, which is now well below what markets are pricing in. We've been a little bit below market expectations for the past handful of months. There's a few reasons why we're below that 6 or 7. One is we think inflation is likely close to peaking. Clearly, the numbers are continuing to rise, but we're seeing at least a shift in terms of supply chain bottlenecks, delivery times, prices paid indices, things like that indicate to us that inflation can come down. But also, as you mentioned, there are signs not just on the inflation front, but on the economic growth front that it's likely slowing. And we think that can give the Fed a little bit of pause as they engage in their rate hikes. But finally, and I think most important for our view of 4 to 5 rate hikes this year, is that that's not factoring in QT. If you factor in 6 or 7 rate hikes while the Fed is shrinking its balance sheet, that's a lot of tightening. And if the Fed shrinks, whether it's 500 billion, whether it's $1 trillion, we don't know right now because they haven't really communicated to us what their plans are. When you factor that in, that's another hike or two. So we're a little below market expectations, and we think the Fed will take a little bit more of a patient approach so they don't choke off the economic recovery and send us into a recession.
Colin Martin of the Schwab Center for Financial Research. Thank you, sir. Thank you very much. Lisa, that TIPS auction yesterday was really soft, wasn't it? I just wonder if we started to get to that point now that you and I have been discussing for a while, that the risk last year was inflation. This year it's real yields. You bet against inflation, you bet on a big Fed response, whether that's starting to show up a little bit more.
And frankly, people are saying that the Fed is going to respond one way or another, or at least inflation will lead to lower inflation later. And that seems to be right now the parallel that you're seeing, where you're seeing even as people increase their expectations for short-term inflation, that longer-term inflation outlook is actually declining. And so how do you trade in that environment?
The Fed speak front and center today. We're here from Williams at what time, Lisa? 11?
Yep.
And then Brainerd a little bit later this afternoon. Futures up 0.5% on the S&P. On the Nasdaq up 0.7%. Just a bounce back here, a little one on the Nasdaq after a big loss yesterday. Yields up a single basis point on 10s to 197. Crude back in the 90s, just about $90.05, up by 1.9%. Down on the week, the biggest week of losses for WTI of the year so far. From New York with Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
Keeping you up to date with the news from around the world with the First Word News, I'm Leanne Gerrans. The U.S. has ramped up warnings of a possible Russian attack on Ukraine. President Biden says a so-called false flag event may be underway to give Moscow an excuse to attack. Russian officials say no invasion is planned. Meanwhile, U.S. Secretary of State Antony Blinken will meet Russian Foreign Minister Sergei Lavrov in Europe next week. Now, the Biden administration is warning that COVID cash is drying up. It is telling Congress that the US does not have enough money on hand to deal with future variants, stockpile vaccines, or develop new technologies. The Department of Health and Human Services is asking for $30 billion to prepare for new waves of the virus. Google and Facebook parent Meta are facing a data doomsday in the European Union. One of the region's top privacy watchdogs is preparing a decision that could paralyze transatlantic data flows and risk billions in revenue for the two companies. It has to do with contract terms used by Meta, Google, and others to legally transfer user data to the US for processing. In China, another sign that investor angst over tech giants remains high. Meituan fell the most in almost 7 months after the government asked food delivery platforms to cut their fees. They were also told to give preferential fees to restaurants in regions hit by the pandemic. Bloomberg's learned that traders at UBS will see their bonuses cut by about 10%, while on average, the Swiss bank's market unit took an $860 million hit for the collapse of prime brokerage client Archegos Capital. Overall, the bonus pool for UBS employees will increase by 10%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Regardless of whether it's $150 oil, $200 oil, or $100 oil, we're not going to change our growth plans. If Russian oil is sanctioned, or if Russia decides to stop exporting, then it's going to be up to the Saudis and UAEs to decide whether or not to break the pact and increase production under those guidelines.
Fantastic conversation yesterday with Scott Sheffield, the pioneer and natural resources CEO, sitting down with Guy Johnson and Kaylee Lyons. Doesn't matter if it's 150, 100, 200, we're not going to make a change. Crude, negative this morning. We are down on the week, we're down on the session. WTI, down 2.36% to 89.60. Keep repeating this. If you're waking up this morning wondering why equities are bouncing, they're bouncing because we were down hard yesterday. Maybe that's it. But also in the mix, we got a lift late last night on equity futures. Just yesterday evening, following a headline that dropped, that Secretary Blinken will be meeting with Foreign Minister Lavrov in Europe next week. Your equity market up 0.5% on the S&P. Tom, on the NASDAQ, up 0.7%.
Well, but I just want to mention here, John, as we're talking about what's going on at Heathrow, the flight from Qatar Airlines that was abandoned and turned left off the runway, did not touch the runway, I should point out, was Qatar Flight 3 from Doha. It's 39 minutes delayed, which is a very constructive report. I assume, John, they'll do it again.
Destructive winds, Tom.
Yeah.
I imagine at some point you hope nothing's left to come back in to Heathrow.
I want to make clear,
a lot of flights are going to get cancelled.
We're making light of this, but this is real serious stuff in headwinds at Heathrow and frankly at other airports across the United Kingdom. Will Kennedy's familiar with this, living on airplanes. He joins us now on oil, of course, his wonderful work worldwide for Bloomberg. Will, what I find interesting as a parallel is Deutsche Bank, DWS, an old Deutsche Bank wing, and Citigroup just say, no, the $100 plus guys have it wrong, as a general statement. State the case that oil is not going to go to $100.
I think there are two ways you build that story. The first is Iran. Clearly, there's some optimism that there will be a new Iran nuclear deal, which will allow the Iranians to export more, maybe as much as another 1 million barrels a day, and that will change the supply and demand balances for the rest of the year. There's a debate by how much, but it will clearly have an impact. And two, I think you say this stellar growth we've seen in demand can't continue. The Fed and other central banks having to tighten hard. Consumers will eventually feel that, and some of this really strong catch-up demand that we've seen as we've come out the worst of the pandemic is going to slow down. So that's the story. Yeah. It's, you know, there are reasons that it will calm down.
At the end of Mr. Blinken's statement, I believe 3 days ago, his terse one-paragraph statement, he talked about our allies, given all that's going on. Where does Riyadh fit into that calculus?
Clearly, there have been conversations going on. We know that Biden spoke to the king quite recently. There have been American officials in Saudi Arabia this week having conversations. Now, for the time being, Saudi Arabia is sticking to its plan to increase production slowly, but it wouldn't be a surprise if they've talked about what would happen if the crisis in Ukraine developed darkened, deepened, and that would have to mean Saudi Arabia and the UAE stepping in to fill some of that gap if the oil were to be disrupted.
Will, do you understand the moves in oil this week?
What we got was a really, really strong physical market in the middle of the week. People were screaming for oil. The spreads were just saying we need oil now. And in fact, physical oil being sold in the North Sea got above $100 a barrel. I suspect what happened is that gave some refiners some pause for thought, and things have just come back a little bit. That, you know, some of that extreme heat we saw on Wednesday has come out of the market, and when you layer on top of that some of these headlines we're seeing about lessening tension, possibly Lavrov Blinken, to do with the Iran talks in Vienna, that's given reason to pull back going into the long weekend.
Bill, can we just finish on the supply response here? I think this is what's fascinating to me. We've got someone in the oil patch, in the shale patch, saying, not going to do it at 100, won't do it at 150, won't even have a look at 200. Is this about ability or willingness, Will? Which one is it?
I think it's the message that Scott Sheffield is getting from his investors. It's very noticeable whenever a publicly listed shale company says anything about raising production, they get punished by the market. Investors keep saying loud and clear, just keep going, we want cash, we're not interested in growth. But I do think there's a bit of hyperbole in what Scott Sheffield's saying there. There are lots of other producers in the Permian, above him and below him. Above him, you've got Exxon and Chevron, and they're both planning to add production because they need it to replace declining fields in other parts of their global empire. And below, you've got a layer of private producers who aren't subject to the same investor pressures, who will want to increase production when they're getting $100 a barrel. So it's interesting, it's important. The Permian won't grow as fast as you might think it would, but I think what Scott Sheffield's saying there is not the whole story.
Will Kennedy, thank you, sir. Out of London. Will, stay safe. I know that it's super, super stormy over there at the moment. Thank you, sir, as always. Tom, this is the story right now in crude, isn't it? Where's the supply response going to come from? How supply constrained are we? Where is the capacity, and are they willing to actually use some of it?
It folds into the geopolitics of it, and this is where Edward Morse of Citigroup is acclaimed. And I'm sorry, John, there's just two schools of thought out there. The media gives all the headlines to the $100 a barrel above $5 a gallon gasoline, and there is a very competent group saying, well, yeah, maybe, but maybe not. We heard that from David Bianco as well as what we've heard on Bloomberg Television from Mr. Morse.
Lisa, crude at 89, Brent at 91.
Yeah, but you know, the supply response, I just want to dig in a little bit on that. There was this feeling after 2014, the boom and then the bust of the shale patch, that they were never going to do that again. And a lot of people were skeptical, but this is a test of that. And it seems like you have not seen that increase in output, despite the incredible increase in revenues that they have coming in. So if you don't get this impulse that is responding to the price of oil, exactly what you're saying, right? What's going to cap the prices in a way in the near term? This is what people are struggling with. And at the same time, others are saying, it's gotten a little ahead of itself.
It's the discipline people were hoping for. Energy equities on the S&P this year to date, of 22.75%. There's some real performance, Tom, on the equity market. That sector absolutely flying. The NASDAQ 100, I think, is down, what, 13%, Tom, year to date? Energy equities on the S&P up 22.75%.
And into Friday, reading, John, it's just simple here. There's so many schools of thought on what is value. His energy already made all the easy money, just as one answer. There's got to be like 5 core strategic guesstimates of where we are to the end of the year.
Elisa, you've asked the important question. How important is the crude call for the economy?
This is probably the deciding factor, frankly, for the S&P, but also for the recessionary idea. If you do get oil prices that continue to climb, $100 a barrel, $150 a barrel, can the U.S. avoid recession in the near term? And honestly, the Goldman Sachs analyst came out and said, this is actually a big concern for them.
Does the Fed do less or more in that environment?
Exactly.
RBC's Laurie Calvasini was talking about her banking analyst who said that maybe if we get an energy spike, they've got to do more, not less. Tom talked about the reading over the weekend. Every single Sunday, Andrew Sheets and the team put out the Sunday Start. The chief process asset strategist at Morgan Stanley will join us next to talk about what they'll be looking at through the weekend and how we kick things off next week after a long weekend here in America. Futures up 22 on the S&P, up 0.5%. Yields unchanged on 10s at 196.68 and crude with a break of 90 at 89.67, down by 2.3% on the day. From New York this morning, good morning to you all. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The sort of, market narrative is that we get 10% corrections all the time. I mean, that's just patently false.
We're looking at still an economy that's really quite healthy and demand is really strong.
What we're seeing over the past couple of days is more demand for hedges.
Flows into equities have been really strong.
Bonds are a bad place to be. Stocks are less bad.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television, on an eventful Friday. John, the headlines, maybe a dearth of headlines recently out of Russia, but all eyes on Belarus into the south, the Black Sea.
That could be the story into the weekend, Tom. The story right now for this equity market is that we have talks scheduled. That improves things just a little bit. Sentiment improves off the back of that as Secretary Blinken gets set to meet Minister Lavrov next week, Tom, in Europe.
All of that moving, and as we mentioned in the last hour, oil a little bit in as well. David Bianco emphasizing their call at DWS for lower oil prices. But with that is a market reset. John, let's first talk about what stocks have done. They've looked at earnings such as Deere and others and said, not bad, a lift this morning.
And not bad, but when it comes to the valuation for big tech, for tech more broadly, Tom, we got a problem. The Nasdaq got a massive, massive punch yesterday, a punch lower, down by 3 percentage points on the Nasdaq 100. Tom, for me today, it's about the Fed speak. It's about the core of the Federal Reserve, getting hold of the narrative around what to expect next month from this Fed. And maybe a hint of what we can get subsequently too.
What will they do on narrative? To me, they're not going to talk about the balance sheet. They're going to love to talk about rates, and yet we need to hear about the balance sheet ballet.
Balance sheet 1, size of reduction, what guides the size of that reduction, Tom? And point 2, I want to understand the strategy now. President Bullard talking about front loading, President Mester talking about back loading rate hikes. The consensus on the street is front-loading. If I was to pick out a consensus right now, I would say it's front-load rate hikes and hope inflation fades in the back half of the year. Later today, 11 Eastern, Williams of New York, and then Governor Brainerd, Tom, at 1:30 Eastern. They're the two to watch.
Lisa, what's the bond market listening for, particularly from Governor Brainerd?
50 basis point rate hike. Are they going to
she's not, come on, she's not going to say that.
But if she weighs in on whether the front loading or the back loading, right? I mean, this whole idea that Loretta Mester raised that perhaps they should go tentatively now and wait to see how the inflationary backdrop evolves over the year was new. Is there a consensus on the front loading, and then what does that front loading look for? To me, that's interesting. Also, will she confirm the balance sheet reduction that people are talking about and focus on the mortgage debt in particular? People are wondering about that. Are they going to make a more aggressive push as we get rents climbing at the fastest pace on record?
The VIX comes in 26.69, down from a 27.20 ugly close yesterday as well. Standard & Poor's up 22 points, 0.5% as well. We've got John, 140 Dow points higher.
Is that where we are, Tom?
Yes.
0.4% on the S&P, up 0.5%. Yields unchanged at 197. We've talked a lot about Brainerd and Williams. Don't rule out Governor Waller either. Governor Waller's been actually quite outspoken at times. You get the feeling the core of the Fed, the Board of Governors, together with the chairman. Governor Waller's flown solo before. Look out for him a little bit later this morning as well. Crude is lower. Lisa's focused on that. I know you are too, Tom. 89.92. We're down by more than 2 percentage points. Big weekly loss, the biggest of the year so far.
Absolutely. Let us get right to it. Andrew Sheets with us, writing a wonderful summary of the Morgan Stanley view, and this on cross-asset analysis, of course, of London. Andrew, good morning. What will you write this weekend? I don't care about, I'm going to front-run your clients right now. I want to know the theme that you're focused on as you write this weekend.
Well, look, I mean, I think a theme that we've been very focused on is this idea that the year could really be kind of a year of 3 acts or 3 parts. And I do think we're in the hardest part right now. You know, it's the first quarter where the growth uncertainty is the highest, where the inflation uncertainty is the highest, because inflation's high and it hasn't yet started to come down yet, where the policy uncertainty is the highest, because we haven't yet had that very important March meeting where the Fed's going to give us, I think, quite a bit more detail about how it's thinking on policy, and where the geopolitical risk is the highest. And so I think these are still major issues to the market. These are still reasons we're not advising investors to buy the dip, so to speak. But these are also factors that could look very different as we're thinking about, you know, April and May. And I think that's also something that's important to keep in mind.
Andrew, I know how closely you work with Mike Wilson. And over the last few weeks, I think what's built up over there is something really interesting on the growth side. You framed that as inflation first, then policy response to it. The next leg is the growth story in the back half of this year. Just how bad, Andrew, do you think this is going to be?
Well, I think there's a lot of uncertainty around it. And I think this is where, you know, the China policy response is very important. And the fiscal story more broadly is very interesting, right? You have contractionary fiscal policy in the U.S. and the U.K., but you're going to have easing fiscal policy in China on our forecasts, and easing fiscal policy in the Eurozone, because the recovery fund funds are finally going to get spent. So I think this is a complex picture. Overall, Morgan Stanley's economists think growth this year is going to be solid. It's going to be good, actually. But I think this is still the part of the year where that uncertainty in growth is pretty high, and where there's a lot that could happen and a lot we don't know. So again, hoping for more clarity on that, but don't think investors are going to get that clarity maybe until you advance a little bit further in the year.
So in the meantime, Andrew, don't buy the dip at the index level. What would you be buying?
Well, I do think this is a market where you do have really diverse, I think, vulnerabilities and exposures to this narrative, right? So if we take a step back, I think what investors are worried about are valuations are high, inflations are high, central banks are behind the curve. But, you know, valuations aren't high in a lot of non-U.S. equity markets. Inflation is not high in much of Asia. And central banks have not been slow to react in parts of EM. So I think focusing on cheaper global equity markets, I think a market like Japan, focusing on markets where inflation is lower. So we're more bullish on fixed income in China, where we think inflation is low and policy is still going to be easing. And even in some of those emerging markets where they're way out in front, have been much more aggressive on policy, it's on those markets where we feel more comfortable receiving interest rates being more constructive on duration. Most markets were not constructive on duration, but in some of those EMs we are.
Andrew, do you think that equities really are pricing in the 6 rate hikes that the bond market seems to be pricing in?
Well, on the U.S. side, we still think not quite. I mean, the S&P this morning is roughly where our strategist, where my colleague Mike Wilson thinks we'll end the year. So that doesn't imply a whole lot of risk premium, again, to kind of reflect the increasing rate risk and the fact that we think real interest rates keep going up. But, we think stocks in Europe, stocks in Japan, I think those markets are fine if rates are a bit higher. Those are markets with very high equity risk premiums, a lot of ability, we think, to absorb higher interest rates. So, those are markets that we think can end the year higher by double digits. And so I think there is a real divergence there, but still in the U.S. assets where we're most concerned, a little bit more risk premium is required.
Andrew, how are you thinking about oil as you take a look at this call right now? If oil prices stay where they are, climb to $100 a barrel, how does that change your asset allocation in the U.S. and beyond?
Yeah, so there's obviously a big debate around oil. We're in the more bullish camp. I'm in the more bullish camp. And so our thinking is that demand is ultimately going to be reasonably strong this year, or demand is going to keep increasing because Morgan Stanley is forecasting nominal GDP to increase by about 6% this year on a global basis. That should mean more oil is used. And supply remains very low, and that supply is going to take a long time to ramp. It's, as you were discussing in the last segment, it's just not really responding to higher prices in the way it usually does. So strong demand, more limited supply, all of that makes us think that the oil price will be higher, and the curve is also backwardated, so it's not very hard, or it's easier for oil to exceed what's currently priced in.
Andrew, I've been focused on growth, and you mentioned it. I love what you said there about pretty good growth is what Morgan Stanley sees. To me, it is the great growth guess of 2022. Which of the growth guesses is the market priced for? Tepid growth, Morgan Stanley growth, or even a surprise buoyant growth?
Yeah, so Tom, I think this is fascinating because I think it depends on what market you're looking at. If you look at the copper price, it looks like the market is expecting very good growth. If you look at the completely flat UK 2s 10s curve, or the inverted US 2s 10s curve 1 year forward, it seems like the market's very skeptical that growth can hold up to interest rate hikes. So I think that there's a lot of this, on a cross-asset basis, kind of very different growth being priced in where you look. Ultimately, we think that the market can price in a higher terminal interest rate, that central banks are going to be able to hike further before this cycle ultimately ends. This is also a case where we do think that the oil price can rise further to price in more growth optimism. And then on the equity side, I think you want to be expressing those cyclical exposures outside of the U.S. It's in European cyclicals, it's in cyclicals in parts of Asia where we think that there's much better risk reward around this idea that ultimately growth will be okay, albeit with high uncertainty.
Andrew Sheets, as always, sir, of Morgan Stanley, looking out for the note this Sunday, the Sunday start from Morgan Stanley, always the best way to start the week for the week ahead. A long weekend coming up. Just to get up to speed with what's happening right now, futures up about 0.25%. The rally fades just a bit. On the Nasdaq, up 0.33%. The rally fades, the bounce fades just a little bit. The tone did improve overnight as we got a scheduled meeting with Secretary Blinken and Foreign Minister Lavrov. The tone improves for the equity market, at least for now. We've asked all morning, will it stick? Crude at $90 a barrel, down about 1.8%, down on the session, down on the week. The hope may be that we get some crude supply by some kind of deal with Iran. I stress that's the hope. The pullback is interesting, though, given the tension around Ukraine through most of this week. The Fed speak's going to be something to watch as the day progresses. We will hear from the likes of Evans, the likes of Waller. We'll hear from Brainerd. We'll hear from Williams. And Tom, the third piece of this story today, which I know you're super addicted with right now, Storm Eunice battering the United Kingdom. And what you're seeing at the moment are just some highly, highly skilled pilots landing some really large planes into London Heathrow. And this channel right here, Tom, Big Jet TV on YouTube, getting a ton of people tuning in to stare up at British grey skies. And these planes, Tom, pop through them. and execute some unbelievable landings in London Heathrow.
Let us close the loop on one of the flights we looked at, Doha to LHR. This is Qatar Flight 3, and we believe that successfully landed with a very nice landing. John, it looks like it's a little better right now. I think the conditions may be there. Patchy blue sky at all. Maybe it is the backside of Eunice.
The hope that things improve, Tom, and hope everyone in the UK stays safe. Tom Keane, Lisa Bravis and Jonathan Ferro, futures up 0.25% from New York City. This is Bloomberg.
Keeping you up to date with news from around the world, this is the First Word News, and I'm Leanne Gerrans. Russian Foreign Minister Sergei Lavrov will discuss the crisis in Ukraine with U.S. Secretary of State Antony Blinken next week in Europe. Their meeting was set hours after President Biden warned that the chances of a Russian invasion of Ukraine were still very high. Moscow has denied it is planning an attack. Now, Cleveland Fed President Loretta Mester supports tightening policy at a faster pace if needed to fight inflation. In remarks for a virtual event, Mester said it will be appropriate to raise interest rates next month and speed up the pace if inflation is not moderating. Mester said she expects inflation to remain above 2% this year and next. In Hong Kong, Chief Executive Carrie Lam will delay the election to fill her post so the city can fight its worst ever coronavirus outbreak. The committee of 1,500 largely pro-Beijing electors who choose the chief executive will meet on May the 8th instead of the 27th of March. Meanwhile, Lam says Hong Kong will make it mandatory for all residents to have a COVID test. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
that capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
When Putin makes his calculations about whether there should be a war, he's going to have to look at the Russian economy, which is in no great shapes at this point. If he wants to have a war, he's going to have to suffer severe economic consequences.
The words of Bob Hormats there, the managing director at Tiedemann Advisors from New York City with Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. One scheduled meeting for next week, enough to give this equity market a bit of a bounce. The meeting next week between Secretary Blinken and Minister Lavrov, your market up 0.2%, the Nasdaq up 1/3. That bounce, though, fades. As this session grows older, we roll over just a little bit. Yields unchanged at 195.81 on 10s, euro dollar going nowhere at 113.55, and crude back in the 80s. Tom Keene, 89.64, down by 2.3%.
John, thanks so much. It's been a wonderful day. Thanks to our booking team for just a great job with Elizabeth Economy of Hoover and Ambassador Hormats on short notice. And now we finish strong with Seth Jones. To say he's Director of International Security at CSIS doesn't describe the institution. The Center for Strategic and International Studies is America's definitive house on analysis of war. Dr. Jones, thank you so much for joining us today. Arleigh Burke founded CSIS. His ship, the Arleigh Burke, is in the Black Sea. What is the effect of us showing the flag in the Black Sea to Vladimir Putin?
Well, I think what it means right now is that the United States is not going to back down with a gun to the head of the Ukrainians. It's worth noting that despite what the Russians say, they've got 105 battalion tactical groups, BTGs, surrounding Ukraine, 500 combat aircraft within striking distance, and as you noted in the Black Sea, 40 combat ships in the Black Sea. So by the U.S. showing its own flag that it's not going to back down in this crisis.
Since you were in Chicago with the great John Mearsheimer in Realpolitik, you have done a real analysis of the cost of war. The general consensus is any kind of conflict would involve injury, great death, great damage. Do you agree?
I do agree. Part of the issue, though, depends on what the Russians do. If they invade all of Ukraine, push to the Polish border, it has the likelihood of creating significant cost, not just on Russia and its own economy, but on its soldiers, which will have a political effect. The Russians just try to take a salami slice of Ukraine. We'll see how NATO and the U.S. respond. So part of the answer to your question depends on how far the Russians actually go in conducting war.
Seth, what kind of military altercation is Russia prepared for, based on your experience from the Special Operations Forces in Afghanistan and your experience just with military buildup?
Well, the Russians are prepared. They have the numbers. We've got 150,000 total forces, plus about 50,000 Belarusian forces. That's enough to invade at least part of the country. They've also been using a lot of irregular units and cyber operations. So they do have the ability to invade a big chunk of the country in hopes that the Ukrainian government under Zelensky collapses. That's a serious threat to the entire stability of Ukraine.
What do you make of the U.S.'s approach, which a lot of people are calling unprecedented, of releasing information, intel in real time to the population, basically letting them know exactly what the troop buildup is, what they're hearing, and the disagreements among the different parties?
I actually think it's been quite helpful. The Russians are the ones that have generally, in practice, we've seen it in the wars in Georgia, even in Ukraine and Crimea historically, and they did this in Syria, to lead the narrative. And what we've seen by the U.S. is getting intelligence out. And actually, as we've been doing, using commercial satellite imagery to verify what the administration has been saying, we can actually assess ourselves. So there's been both of those things operating here.
Seth, what's interesting to me, and this goes to your book, Three Dangerous Men, and you talk about irregular warfare. I think my word for that is guerrilla, because I'm the amateur. If Russia prosecutes a guerrilla war, does Ukraine have the troops or the guerrillas to defend?
Well, I think what we have seen is the Ukrainian population has demonstrated morale here and resistance, including the Ukrainian leadership. Yeah. So I think what we've seen, they have the weapons or some weapons to do that. I think what they'll need is long-term support if that's what this ends up if that's what this ends up becoming.
What is the price if Putin takes X number of square miles north of Donbass up towards Belarus, maybe wrapped around Belarus? Let's imagine a line like in any war map where they take some territory. What is the cost to him of doing that?
Well, I think the cost to him would be, particularly if he uses Russian conventional forces, that is main battle tanks, armored personnel carriers, attack helicopters. Yeah. That's what the one major cost is, because those can be shot down. You can use Javelin anti-tank missiles to hit those tanks. That poses a serious threat. If he uses those irregular units that we've just talked about, that puts less pressure on Putin, because there's less likelihood of dead Russian soldiers that the conventional invasion would involve.
Seth, wonderful to catch up with you today, sir. Just getting a headline that I want to bring to you and get your reaction to. It's tough to read this stuff at the moment, so I want to be really delicate with the language. This comes from Interfax, and it says that the rebel leader in Ukraine, in Donetsk, is saying that children, women, and elderly people will evacuate to Russia due to an escalation of conflict at the contact line. This is the leader of the so-called Donetsk People's Republic. How do you respond to that, Seth? How would you interpret headlines like this?
I mean, what it suggests to me is that we've seen it on both sides of that contact line, that they're trying to move civilians out. What that suggests is preparations for combat operations. And note that we were looking at satellite imagery overnight of those are Russian-backed main battle tanks in the Luhansk and Donetsk area. So the Russians actually have a military footprint on the ground. This does suggest an increasing likelihood that there will be some kind of ground conflict.
Seth, thank you, sir, for your time this morning. Seth Jones there of CSIS. Your equity market story fades again. Up not even 0.1% now on the S&P. On the NASDAQ, up a little more than 0.1%. Tom, that is a headline from Interfax. According to them, Donbass separatists, the evacuation is due to conflict escalation. This according to Interfax and according to Donbass separatists.
This is important, John. I've been using dollar ruble as a litmus test, folks. There's three ways to measure the ruble: euro ruble, a ruble basket, and dollar ruble. We use dollar ruble at Bloomberg, and the answer is, John, I'm going to use this word very carefully. It is a spike of weakness in ruble right now, 75.80 out to 76.20. That breaks the resistance trend.
Equity futures just about positive on the S&P and on the NASDAQ too. Yields come in almost a basis point to 195.29, and crude is still lower, negative 2.3% to 89.68. Coming up on the program, the brilliant Kelsey Barrow, fixed income portfolio manager at JP Morgan Asset Management. We'll catch up with her next from New York. This is Bloomberg.
of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Live from New York City on TV and radio with Tom Keene and Lisa Braberts, I'm Jonathan Ferro. Let's get straight into this equity market. We turn lower. On the S&P, we're down 0.1%. The Nasdaq just about holding on to positive territory. We got a bounce yesterday evening off the back of a scheduled meeting for next week between Secretary Blinken and Minister Lavrov. That was building confidence just a little bit. Tom, then we've rolled over through the morning and now into negative territory. Of this headline from Interfax, according to Interfax, Donbass separatists say women, children will leave for Russia, Tom, evacuating women and children and taking them to Russia.
There's no question about it, and we've seen it. And John, just to go through it quickly or not to waste time, from Kelsey Barrow, but Swissy shows its stronger Swiss and gold back above $1,900 announced. John, what do you see in the Bloomberg right now?
Yields in, Tom, a couple of basis points on 10s, back to 194.
We're going to continue with this and continue to monitor headlines as we see out of the various European sites. Kelsey Barrow has one of the toughest jobs on Wall Street. There's a guy named Michael she's got to report to, and he is tough as nails. And that what that means is pro-acuity. We do not talk about overnight index swaps. That is massive, massive inside fixed income baseball. It's something you'd see in chapter 23 of Frank Fabozzi. Kelsey Barrow joins us now from JP Morgan Asset Management. And what you're focused on is not the spot overnight index swap, but out a couple years. Translate for mere mortals.
Yeah, absolutely. So the OIS curve, what it shows us, the forward OIS curve is the path for the Fed funds rate, not just this year, but into 2023 and 2024. And one of the things that is really interesting about the curve right now is it's actually started to invert. So the market is pricing in rate cuts in 2024. And this is unusual because I mean, the economy is still extremely strong. 500,000 average job growth
Right.
per month. Yet we're seeing these cuts. And the bottom line is this will continue until the market is proven wrong. They need to see the cut happen. They need to see the economy not break down as a result of higher rates. That's the only way you get that higher terminal
Right.
rate that everyone's talking
So for
about.
you and me, our world stops Friday night at 7 p.m. That's okay. Hold on. I'll have another drink, but I've got to read J.P. Morgan Weekly Prospects right now. Ferroli and Company are going to publish tonight off the Fed Speak Today. Can the Fed Speak Today move your world?
No, I don't think the Fed Speak's going to move the world. This is what I noticed from the minutes, and I know you don't like to read the minutes, but let me just tell you about what was not said in the minutes, right?
Kelsey did her research, Tom. She did her research. Carry on.
It's not about what they said, it's actually the words they didn't say. So let me tell you.
Please, go.
The words they didn't say. Transitory. Transitory is completely gone from the lexicon. The two other words they didn't say, gradual or steadily or measured. They have completely refused to categorize this cycle.
So are you getting out in front of Bruce Kasman now and talking 50 beeps for sure?
Yeah. If the market is allowing it,
John,
they're going to
savor.
walk through that door.
Bob Michael's there. I caught up with Bob earlier this week, Kelsey. He wants to see 50. What he said, Kelsey, was interesting, and I know you two work really closely with each other. It's what happens if we don't get a 50 basis point hike. He actually thinks we get an adverse reaction because the market starts to believe they have not got control of this. What would you look for?
Right. So the market doesn't like to be surprised, and the Fed doesn't like to surprise the market. And so if the market is pricing in a high probability of 50 basis points, the Fed should take that opportunity, take it as a blessing, and go with it. I mean, I think the thing here is that they want the market to follow the data. And the data over the last couple of weeks, we got the CPI report, we got the payrolls report with the backward revisions for the full year. All we're seeing is that the economy is still red hot. And unless Powell comes out and walks this market back, if the market is pricing 50 basis points, the Fed should walk through that door.
Well, let's talk about credit strategy now. What is it, Kelsey?
So in credit, we're still seeing some opportunities, but we really do want to start focusing on getting higher in quality and focusing on structures that are shorter duration. So that's things like securitized credit, bank loans. And I'd also like to say, you know, we're looking at EM local this year, which is a really interesting one because you'd think with the central banks on the move, this would not be a good time for emerging market local debt. But actually, it's been one of the only areas of the fixed income market that has had positive returns. And my observation here is that EM central banks who were hiking like crazy in 2021 have actually had the foresight and the diligence that DM central banks didn't have, and were the ones that were hiking rates, now have the cushion and have been able to withstand more of this volatility this year with the DM central banks moving forward.
Kelsey, until a couple of weeks ago, the Fed has really dominated all headlines with respect to markets, and now we're being distracted or perhaps dominated by the Russia-Ukraine conflict. There's been a huge divide into what the Fed response would be and what the market response would be should the escalation continue to get worse. What's your view in terms of, does it make it more likely for the Fed to go and hike more quickly or less?
Yeah. So in the very near term, we know that treasuries serve as a safe haven, a flight to quality. They go to the most liquid point on the curve, that 7 to 10 year point. That's what's going to rally when there's a lot of uncertainty. But when I look at the minutes, going back to those minutes, they mentioned geopolitical tensions a number of times, and they only mentioned it in the context of higher inflation, upside inflation risks. So I don't think that this conflict is going to stop the Fed from removing accommodation.
This is the key concern for a lot of people who are relying on the Fed as a put, and maybe not explicitly, and they realize that it's not going to be. But what is the implication for a market that could potentially be torpedoed by an economy that's slowing in the face of these higher oil prices, in the face of faster inflation, but with a Fed that does not respond?
The Fed is in a very challenging spot. I mean, we've been saying this for a while, and it really hasn't gotten any better. So I think the Fed is going to need to watch financial conditions closely. And, you know, at this point, financial conditions are still very easy. And so they watch that. I know they watch credit spreads. And at this point, although they are wider on the year, you know, there isn't an issue with companies being able to get the liquidity that they need.
John, the committee expects it will soon be be appropriate to raise the target range. The committee decided to have lunch beginning in February. The committee will increase its holding. I'm reading the damn minutes.
Is that your version
John,
of the minutes?
this is more boring than I expected.
Kelsey came out with a call this year, Tom, before almost everybody else, which was the ECB will hike this year. Kelsey, you said it in early January, then all of a sudden, week after week after week, everybody started to join in. What changes for the Fed this time around when the ECB is set to get involved as well?
So sell-offs in U.S. Treasury yields are not generally sustainable unless they're global in nature. Because what happens, and we saw this in 2014 and 2015, for example, is that when the Fed tries to go on its own, the dollar strengthens, that tightens financial conditions, and the Fed ultimately has to back down. The fact that all the central banks are moving together is very, very powerful. So the ECB, sure, you know, they're still a long way behind the Fed. They want to see wage growth. They have to end QE before they focus on raising rates, but they're going to get there. And then I'll just say the next shoe to drop, and you know, this is still far out in the horizon, but these are the types of things that we're really thinking about further out in the future is what happens with the BOJ and their yield curve target? What happens when Kuroda ends up moving out of the position and someone else comes in and we start to see inflation move higher? Because right now inflation there, it's still negative, but there's a lot of distortions there. So we do actually think inflation is still low in Japan, but we could be getting closer to positive inflation fairly soon.
Kuroda's the last man standing. What would drag him away from all of this, Kelsey?
So not in the near term. He's going to stay put. We just saw that the Bank of Japan continued to defend their yield curve target. So they're not in any rush. Nothing is really putting the same pressure on them. You know, they still have negative inflation, whereas they don't need to deal with the headline of 7-8% inflation like the U.S. has. So they're not going to step away anytime soon. But when you think about what causes a more meaningful repricing and term premium across developed market nations, you have to think beyond the U.S. and you have to think about the BOJ, the ECB, and all of them moving together.
Kelsey, next time, 1 p.m. Fridays, we all read the minutes on Bloomberg Real Yield. You know that.
Some
Kelsey
of us
Barrett.
read them on Bloomberg Surveillance, too.
Two of
Just
us.
saying, two of us.
JP Morgan Asset Management. Kelsey, thank you very much. Some headlines from the president of Russia, Vladimir Putin, right now, Tom. He says that the drills in Belarus are defensive. They don't threaten anyone. He goes on to say Russia is not against talks on U.S. security proposals. The stance of the Russian president, Tom, right now.
It is, and Mr. Putin, with the headline moments ago, maybe the key one as I glance through them, there's a lot of headlines coming out. Kiev just needs to discuss conflict with separatists, and the Minsk agreement, or I should say agreements plural, John, that's a key distinction here. Russia doesn't want to speak to Kiev. They want Kiev to speak to the separatists, which they believe are separate from Moscow.
It has been quite a ride over the last 12 hours or so. We got a lift to the equity market initially after a scheduled meeting for next week between Minister Lavrov and Secretary Blinken. That takes place in Europe next week. Then we turned a little bit lower through the morning and then into negative territory of an Interfax report that those separatists that Vladimir Putin, the president of Russia, is talking about right now, are evacuating children, women, and the elderly back to Russia and away from the contact line. And Lisa, then these headlines from the Russian president just settling things down again. I mean, we are getting whipsawed from headline to headline. The degree of uncertainty out there right now is absolutely massive. And I think if you're in this equity market, Lisa, at the moment at least, it's just tremendously difficult.
It is tremendously difficult also, especially since oil doesn't seem to be responding. And that seems to be one of the triggers for economic fallout from this conflict. Seth Jones, though, I've got to keep going back to what he was saying. The troop buildup and some of the less traditional military forces, cyber warfare and other things, really does indicate the preparation of some sort of altercation that will happen. And that, to me, is what a lot of people are concerned about right now.
That was his interpretation of the incoming headlines. The Russians, of course, continue to deny any plans to invade Ukraine. Futures right now just about unchanged on the S&P. On the Nasdaq 100, just about positive, up 5 or 6 points, up not even 0.1%. To weigh in on all of this, looking forward to catching up with Mohammed Al-Arian, Bloomberg opinion columnist, and of course, Queen's College president. That's because you're not very nice to him, Tom.
I don't,
you just got to be kinder to people. Do you think Kelsey's going to come back now?
I like Queen's Park Rangers and you know,
Mets. Tell him you like the Mets. He'll come on.
No, that's the problem. I don't like the Mets.
Well, there you go. Forget it. He's not coming on.
He's coming on in 20 minutes. This is Bloomberg.
Maybe I'll leave radio and come hang with you.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. The US now says that Russia has massed as many as 190,000 personnel in and around Ukraine. It calls it the most significant military mobilization since World War II. The US has ramped up warnings of a possible Russian attack on Ukraine. Russian officials say no invasion is planned. Now, the Internal Revenue Service is adding a second so-called surge team to expand its capacity to process US tax returns. That comes after criticism from members of Congress who say taxpayers are waiting for months to get their refunds. The IRS will also outsource some functions to help finalize returns quicker. The largest maker of farm machinery, Deere, has raised its outlook for the fiscal year. A boom in crop earnings is boosting farmers' demands for the company's iconic green tractors. Deere says it has been able to work around the global supply chain crisis. Shares of DraftKings are falling. The sports betting company added fewer customers in the fourth quarter than Wall Street had expected. That is despite spending hundreds of millions of dollars to attract new gamblers. DraftKings also forecast a loss of up to $925 million. Bloomberg has learned that traders at UBS will see their bonuses cut by about 10% on average. The Swiss bank's market unit took an $861 million hit for the collapse of prime brokerage client Archegos Capital. Overall, the bonus pool for UBS employees will increase by around 10%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Underground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon. Can ESA help humanity take its next giant leap?
I think as we shift away from goods spending back to services spending, and of course, services spending isn't back at trend yet, I do think that that takes off some of the pressure that has been felt on inventories. And obviously, the supply chains having been or getting resolved a little bit.
Quite good yesterday. Gargi Chowdhury with us with BlackRock, and I'll tell you, she is against consensus. She was adamant. Forget about the 6-7 rate hike ballet with all the Fed speakers today. We'll see where that stands as we go to the close at 4 p.m. Please stay with Bloomberg Radio, Bloomberg Television through the day on Fed Speak. We now digress to retail. We may be amateurs, but we are certain it is original what we're doing in retail America right now at every price point. Steve Sadoff invented much of what you perceive in modern luxury retail. I've always said Steve Sadoff of Saks Fifth Avenue flat out invented the word exclusive. He is now senior advisor to MasterCard and former chairman, I should say, and CEO of his Saks Fifth Avenue. Steve, it is extraordinary. And it is about rampant, I use that word carefully, rampant price increases at luxury. Have you ever seen this before?
No, I haven't seen it in years. The luxury sector is strong. You saw growth in the mid, price increases going right and left. And they're pricing, obviously they have supply chain cost increases, but they're pricing at margin. They're pricing in some cases above margin. They're raising their average units. And this is not just at the very high-end luxury. I think at accessible luxury, you're seeing a lot of increases in pricing. And the reality is the consumer is paying. The high-end consumer wants to spend money on themselves. They haven't been traveling. International travel is way down. And they want to treat themselves. They've been stuck at home in the pandemic. And you're seeing it come about in terms of the luxury spending. But you're seeing it broadly in terms of overall spending. I thought that you might start to see a slowdown in January, and the reality is that the consumer has been strong through the fall season and strong in January.
So, Steve, let's take this wider. This is absolutely critical, and I go to Feldman at Dana Telsey's group today, who said, look, Home Depot's getting it done. Home Depot's not Tiffany's. But with that said, Steve, do we miscalculate the slowdown, and can you, like James Bullard, Fed Bank President of St. Louis, can you say economic growth will be better based on what you see at MasterCard?
Right now, I'm seeing a strong consumer. You saw a 7% growth in January. You saw, let's call it high single-digit growth through the holiday season. And this was across segments of the consumer. So I believe, and it's in-store as well as online. Online has grown, let's call it 60% since the beginning of the pandemic. The brick and mortar is back. People are back in department stores. I don't know that I see that slowdown yet coming. Now, clearly, you had the child tax credit stop. You have the markets that are volatile right now. There's the rising interest rates. So are there clouds on the horizon? Of course there are. Supply chain is starting to ease a little bit, but I think that you're in a situation right now where inventories have been in line. If inventories start to rise a lot, you're going to get back to this discounting in the fall. So I'm a little bit worried about where the consumer is going, but it hasn't shown up as a weakness yet.
Steve, is the signal different from the low-income individuals and the high-income individuals?
I don't think you've seen it yet. I think that because you had the support programs running through essentially through January with child tax credits, I have not seen that bifurcation. I would expect that you're going to start to see the middle of the market to the lower end starting to take a hit as you go into the year. Obviously, the high-end market's volatile in the stock markets, but right now it's been holding up really well. If you look at the And I'm just using examples of whether it's the dollar stores or the outlet off-price sellers, they've been holding up really well. The luxury holding up well. Department stores have had the best performance in years. You saw 10% growth through the fall season in the department stores. So this is an economy where the consumer economy has been booming. Again, you don't have people traveling. You don't have airlines. Hotels are still constrained, and people have been buying stuff. And there's still a little bit of pent-up demand relative to the availability of some of the categories. So I would expect to see it continue for a bit, but there certainly is some questions about what happens as we go into the middle of the year.
I was noting that apparel sales, as you put out there, were up nearly 40% in January year over year, which is a record in the data that you've collected going back years. Are there certain areas that are driving some of the spending that will fade back? What do you see for the composition of consumer expenditures throughout the remainder of the year?
Well, I think we're in an apparel moment, and it's really interesting. People have been pent up at home. They've been wearing their sweatpants. Now they want to get out. But they're going to events and parties, but they're not dressing the same way they used to. It's not the same suit that they're wearing. You want fashion, you want newness, but you also want comfort. So there's a whole new styling that's going on, and those tend to last for several years. So my guess is that the apparel sector is going to hold up really well in the next year or so. So that's one where I feel good about, which could be good for the department stores. And it's going to be good for the specialty apparel retailers. Clearly, sectors that are the get back to outside, the restaurants, the experiential categories, the travel, are going to start to recover strongly as we move from pandemic to endemic phase.
Steve Sadoff, thank you so much, with MasterCard, their senior advisor. Lisa, many stories going on right now, but the lead story here, and moving the markets, moving ruble, moving Swiss franc to a stronger Swiss franc, are Putin and his near-abroad neighbor of Belarus, Mr. Lukashenko. And the one headline, Lisa, I'll let you decide what you like here. Lukashenko will decide with Putin on my presidency. That is a stunning headline.
Yeah, also Lukashenko talking about how he discussed economic sanctions with Vladimir Putin. In this headline, Vladimir Putin saying, I didn't pay attention to invasion reports. You know, there's this question about going forward, how they're going to message the imminency of some sort of invasion, with the U.S. is pushing that kind of narrative and Russia very much pushing against it. The market reaction, though, Tom, is interesting. We saw some concerns peaking about individuals, citizens, non-military personnel being moved out of some of the rebel territories in Ukraine. That was Interfax reports. But the interesting thing to me is that we saw an immediate response in equities, a rolling over, and how much people are ready to respond and pounce if there is some sort of altercation is something that indicates how much people are not pricing that in right now.
I'm going to go to ruble, which pulled back from the good news of the last 12 hours. Ruble weaker, back to where it was roughly 18 hours ago. Not a big deal, I guess. But I would look at the curve flatness of the United States. The vanilla curve, the 2-10 spread is at 46.70 points. Nowhere near the angst of Monday and Tuesday. But nevertheless, the curve flattening here harkens back to where we were 24 hours ago. It will be an extraordinary weekend. Lisa Bramwitz and I and John Farrow really would like to say thank you to our team, and particularly for the efforts to give you this morning Elizabeth Economy, Robert Hormats, and Seth Jones. A spectacular day of international relations for us. Stay with us. The story continues here on Bloomberg Radio and Bloomberg Television. Good morning.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. It holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We are giving up the overnight gains this morning. From New York City, good morning, good morning. Your equity market dead flat on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, whipsawed by headlines.
The headlines have just been flowing fast and furious.
The Ukraine headlines. Markets know that this is not good.
Markets are clearly up and down,
struggling to connect the dots and really understand how bad this is.
The developments between Russia and Ukraine.
People are feeling nervous. This is a big air pocket of uncertainty,
which clearly has been bleeding into volatility.
We do see more tensions.
Any sort of serious escalation.
If Russia does invade Ukraine,
all bets are off.
50 bips is completely off the table.
Another reason why the Fed's going to be very, very careful.
Anything can derail this Fed.
So there clearly is downside risk.
That's the kind of thread the market is pulling on right now.
Team coverage right now with Bloomberg's Maria Tadeo from Brussels, alongside of Bloomberg's Anne-Marie down in D.C. Maria, an ongoing press conference with the Russian president and his counterpart in Belarus. What are you hearing?
Well, here's the thing, Jonathan. This press conference by Putin, but also Alexander Lukashenko, it is very important in many ways. You know that Lukashenko has been in power since 1994, I should say. But of course, the only political ally that he has at this point is Vladimir Putin. Now, the goal of this press conference, but also the meeting the two have had, is to decide what happens with the military drills and the military exercises in Belarus after Sunday. Now, of course, you have to look at the map. Belarus is a country that is located between Russia and Ukraine. If you want to attack Ukraine, well, Belarus could be a good starting point. Now, a number of things that I'll be watching out for here. One is whether or not the Belarusian leader decides to keep the Russian weapons on site, whether he decides to extend them, whether he's open to more military drills in his country. And then, of course, yesterday in full military gear, he gave a quote that really has sent a lot of concerns in Europe, saying, if we feel we need nuclear weapons in Belarus to protect ourselves, if Vladimir Putin asks us to host
nuclear weapons, that is something that we would consider. Of course, again, you have to go to the map. This is a country between Russia and Ukraine. For the Ukrainians, it makes them incredibly nervous, the prospect of more weapons in a country that is so closely connected, but also, Jonathan, and this is the key, so politically dependent on Vladimir Putin. If he asks a favor, you best believe Lukashenko will say yes.
AMH, let's go to the map and let's go to eastern Ukraine. The reports from Interfax this morning suggesting that Russian separatists in Ukraine rather, are evacuating the elderly, children and women back to Russia. That's when this equity story started to fade. It built up yesterday evening, as you know, once we scheduled a meeting between Minister Lavrov and Secretary Blinken for next week. What's the order of events now, Anne-Marie?
Yeah, so a lot of diplomacy happening at the moment. Just 30 minutes ago, Jonathan, the defense minister of the United States spoke to his Russian counterpart, Sergei Shoigu, and he tweeted that he called for the de-escalation. Then we have next week, Blinken and his counterpart, Lavrov, expected to meet in Europe. Interesting, Jonathan, the State Department says there's preconditions to that meeting. As long as Russia does not further invade Ukraine, they are ready to meet. And then also, Olaf Scholz, the Chancellor of Germany, is calling for a G7 next week. And the President of the United States today will be talking by video or phone call to transatlantic leaders to talk about Ukraine. You can see the concern rising when it comes to the diplomatic path. But I have to say, it is a good sign that channels of communication are open between Moscow and Washington. There's something else, Jonathan, that is slightly worrying to the White House and to the United States as a whole, and that is the Organization of Security and Cooperation. The U.S. ambassador to that organization, Ambassador Carpenter, said that the Russian forces right now are anywhere between 169 to 190,000, just under 200,000. Now, this also includes not just troops, but other personnel like National Guard and those Russian-backed separatists. But Jonathan, he notes that this is almost a twofold, a double increase from January 30th.
AMH, thank you. Dan in DC. And Maria, as always, stay close alongside Maria Tadeo, down in Brussels. That's the story of the moment, isn't it? Claims and competing claims. NATO members say the troop buildup has continued. It's not back down. Russia says there are no plans whatsoever to invade Ukraine. And for market participants in our world, and that's the focus of this show at the end of the day, stuck somewhere in between. Futures right now going nowhere. They were positive overnight. Let's get to Mohammed Al-Arian, the perfect guest to discuss all of this, of Bloomberg Opinion, and of course the Queen's College Cambridge president. Mohammed, I want to start here and fold this into the Fed, because that's what a lot of people are grappling with. If this led to an energy spike, would it lead the Fed to need to do more, need to do less? How are you thinking about these kind of issues influencing this central bank?
So first, it is really uncertain, and that has to be put first and foremost. You know, you talk about the micro issues. We hear competing news. There's also a macro issue. The market so far has been trading in a relatively range-bound way because the market believes it's either going to be resolved by a diplomatic effort, or alternatively, it will be no war and no peace for a while. The market hasn't really embraced the possibility that it could be an even broader range. So it's important to recognize that the uncertainty is even larger than what the market is pricing. As to the Fed, it will make the Fed more hesitant. As you know, I don't buy the 7 hikes for this year. I think that would be excessive. And I look at how the market has rushed to price this, and it just tells me that the Fed better get out there with guidance. Otherwise, they're really going to lose control of the policy narrative.
So, Mohammed, let me bring up the policy narrative and something Matt Hornback of Morgan Stanley said earlier this week. This was the quote. The markets are prepared for 50. If they deliver less than what the markets are hinting at in their price, then that will amount to an easing of monetary policy, and this is not the environment to be easing monetary policy, clearly. What would you say back to that, Mohammed?
So I would say he has a point. When policymakers don't validate pricing, you get a reaction. Now, normally you would get a positive reaction on risk assets because the Fed is being more dovish. But here, inflation is a problem, and it's not going to go away. And it just highlights, John, over and over again, the corner that the Fed has put itself in. This is self-inflicted because it waited so long and it kept for way too long the mischaracterization of inflation as transitory. So we are in this world of second and third best, as you and I have discussed, and it's not clear how the Fed gets out of it. So I think he's right, but what about the opposite? What if they go 50? Will the market then price in the next one as 50 as opposed to 25? We don't know.
You said something important, though, just at the start of that comment, and it's something that reminded me of what Bob Michael of JP Morgan Asset Management said earlier this week. This idea, Mohammed, that if they don't get control of the narrative, if they don't go big, that typically what you would get, and this is more intuitive, a Fed that's more dovish, great, by the market. Bob's suggesting, Mohammed, and I heard you suggest it too, that maybe you get adverse reactions in risk assets because there is a belief the Fed does not have a handle on this. Can you build that out just a little bit more?
Yeah, the nightmare for the marketplace is stagflation. It is a tail scenario, but it is an impactful tail scenario. So how do you get stagflation? The Fed underreacts. It doesn't get control of inflation expectations. Inflation expectations get seriously de-anchored. And next thing you know, the Fed then has to slam on the brakes, but inflation is still on the way up. So the marketplace gets hit in two ways. And of course, the economy gets hit in two ways, by inflation and by stagnation of economic growth. That is the nightmare. So that's how delicate this whole situation has become. And the Fed sort of has to walk that. I worry, and let's hope today this changes, I worry that we've had absolutely no remarks whatsoever from the top leadership of the Fed. And the more quiet they've been, the more the policy narrative has escaped them.
Well, let's think about who we hear from today. We hear from Governor Waller. He's been outspoken before. Then we've got the core of the Fed. We hear from Governor Brainerd. We hear from President Williams of New York as well. Mohammed, you've done a brilliant job of showing how the window is getting smaller. You've done a fantastic job of forecasting this as the data evolves, particularly through last summer, when you start to become more alarmed about what the future might hold. What I need from you that we haven't got yet from you, Mohammed, is what you think the optimal policy response actually is from here. You've said the window's smaller, I get it. What do you think they actually need to do? If it's not 50, what is it?
So, John, when you're far away from the world of first best, there is no optimal policy response. And that's really important to note. There is a less bad policy response, but you've given up on the optionality of an optimal policy response, because when that window was open to the Fed, repeatedly, they didn't go through it. They didn't do anything. So there is no optimal policy response. It's a matter of how do you minimize the unintended consequences and collateral damage. Listen carefully today to John Williams. He's part of the Troika, Jerome Powell, Lael Brainerd, and John Williams. His speech is about the economic outlook. So he cannot avoid talking about policy. So that's the one that you need to listen to today.
There isn't an optimal one. What's the less bad one?
So in my view, I'd rather let inflation run higher for longer, believe it or not, than slam on the brakes and risk a recession. Okay, but it's not, it's not an easy path. And that's the sort of judgment they're going to have to make. I truly believe that if we get 7 rate hikes and we get QT, this economy will not be able to absorb this. This economy has been conditioned for so long to live with liquidity injections and floored interest rate that this would be too dramatic a change for many parts of it.
What I hear from you then, Mohammed, is that there is no soft landing. Is that a fair characterization of what you're saying?
There's no long-term soft landing. You can have the appearance of softest landing and push back the problem into next year, but ultimately you're going to have to deal with the fact that the Fed has fallen behind inflation, and now it simply has to not optimize, but satisfies. And that's a very different policy regime.
Can we turn to the market consequences of that? Mohammed, if you're saying you believe the less bad response, not optimal, but less bad response is to allow inflation to run hotter for longer, because ultimately they've got no choice. If they do the 7 that it might take to bring this down and bring it down quickly, we'll end up in a bad place. What are the market consequences of that, Mohammed?
So there's a good part of the market that believes in a couple of things. It believes that supply chain disruptions are going to solve themselves quickly. They will ultimately solve themselves, but it's too quickly. And it believes that there's a productivity gain around the corner. So for that part of the marketplace, okay, it will be fine to go slow by the Fed because they believe that we have self-corrective elements into the marketplace. There's another part of the marketplace that says, actually, this is not happening fast enough. The bottom line, John, is we're going to continue to see a lot of volatility And it's not just, I mean, there's a tendency to think this is just about Ukraine and Russia, but there's much more than that, as I'm going to argue in the Financial Times next week.
Your promo for the FT next week, Mohammed, on this show. Mohammed, really? You're not going to give us a hint, a tease of what's in the article?
No, because then you wouldn't read it. Not that you read it anyway, but you wouldn't read it for sure.
I always read it. Mohammed, we'll leave it there. It's good to catch up. I look forward to the piece over the weekend and into next week in the Financial Times. Thank you very much, sir. Futures turn a little bit negative on the S&P 500. I want to get you some single names, some movers, and we can do that with Abby. Hey, Abby.
Hey, John. Well, keeping it simple with the macro picture, we do have the NASDAQ 100 futures up slightly more. So not surprisingly, Apple and some of the other big tech names are up. But that's true, too, interestingly, for the banks. Yields are down, so that helps out big tech on valuation concerns being alleviated. But banks typically would fall, as they have been with yields down. That's not the case today. Energy, however, falling once again, down for a fourth out of 5 days. These energy stocks, ExxonMobil in particular, down 1%. But, of course, earnings season continues. Deere is popping as they've raised their outlook as usual. Roku, on the other hand, absolutely plunging. They've blamed their supply chain for the miss. And then DraftKings also down 16%. They upped the outlook, but not much. So a case of a high bar quarter just not delivering.
Abby, thank you. Coming up on the show, Fed officials facing the pressure of higher inflation.
To put downward pressure on inflation, you'd actually have to get to neutral and go beyond neutral. We have to get in a position to do that at some point.
Looking ahead to March, that's next.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
This is a lot of inflation for the U.S. Markets are, I would say, losing faith to some degree that it's going to dissipate in any reasonable amount of time. So without Fed action, the best response to this situation is to front load the removal of accommodation. Let's set a target that we try to get 100 basis points on the funds rate by July 1.
This sets up a really interesting conversation for next month on March 16th. There's President Bullard talking up front-loading rate hikes. Here's Loretta Mester of Cleveland, the Fed president there, saying the opposite. This: if by mid-year I assess that inflation is not going to moderate as expected, then I would support removing accommodation at a faster pace over the second half of the year. So not front-loading the year, but maybe back-loading the year. Mike McKee, I'm confused. Are you?
I'm not actually, John. When you parse what Loretta is saying, she's basically saying we do move in March, and then a couple times after that. And then we'll see whether inflation is starting to come down. So if you take a look at what they're talking about in terms of rate moves, Jim Bullard is obviously talking about, because there are 3 meetings between now and July 1st, he's talking about 100 basis points. He's got to go 50 at one meeting. But Loretta Mester is talking about 75 basis points if she wants to do 3. So it's really that 50 basis point move that's out there that they have to decide whether or not they want to do. And at this point, it doesn't look like Mester's on board with that, but she's willing to watch the data. They do agree that you want to raise interest rates, and March seems to be on everybody's calendar now, so I don't think there's any doubt about that. They want to reduce the balance sheet, and Mester did add to her comments that maybe they do sell some mortgage holdings. That's something that Bullard has suggested, and they're going to have to end forward guidance. They all agree, because they can't really tell you what's going to happen going forward until they see what happens with inflation. So a change in policy there. Now, at mid-year right now, here's what economists are expecting: 7% inflation here in the first quarter, but when we get to the end of the second quarter, it's down to 5.8%. How is it moving? What's moving? All that will play into it, but is that enough of a move that Loretta Mester would then think that they should slow down, or would Jim Bullard think they should speed up? Those are the questions that are still out there, and a lot of that's going to depend on COVID. It's going to depend on Russia and the Ukraine. It's going to depend on supply chains. There are many, many things out there that they don't have answers to right now. Energy prices. Inflation could be way high because of Russia invading Ukraine. We could be well over $100 a barrel, and yet raising interest rates isn't going to help with that at all. That's a lesson from the 1970s. So it's kind of understandable that they're going to have different positions once you get past the March meeting.
Looking ahead to March and beyond, Mike McKee, thank you, sir. Fantastic lineup to guide us through the opening bow now. Bank of America's Jill Carey-Hall, JP Morgan's Jack Caffrey, Morgan Stanley's Sri Sankaran. Jill Carey-Hall, to you first. Bank of America doing a really great job of just outlining what you think is going to happen this year, and the market's just come right to you. Ethan Harris at 7 hikes for 22. We've got Market Banner looking for $1 trillion of balance sheet reduction this year, again next year. Jill, what does that mean to the equity market?
Hi, John. Thanks for having me. Yeah, I think we are expecting a volatile year for equities, and we've had a 4,600 target for year end on the S&P 500. So, look, I think it'll be a volatile path to year end. When you look at the Fed balance sheet reduction, I think that's more important for equities than just the 7 hikes that we're expecting. Pretty limited relationship between market returns and the Fed funds rate itself. But Fed balance sheet and Fed liquidity has been a major driver of S&P 500 returns. So, based on that liquidity framework and what we've seen post-crisis, that would also suggest, just based on that Fed balance sheet reduction, kind of a similar level to what our target is implying, 4,600 for year end. So we would focus on opportunities within the market, areas that have historically fared well during late cycle or when the Fed's hiking. We prefer cyclical growth over secular growth. We like stocks with healthy free cash flow, and we continue to prefer small caps over large caps.
Sri, the line from Bank of America, we're tightening into an overvalued equity market. Are we doing the same thing into credit?
I think that's fair. Credit's had a valuation problem for some time now. But I think some of the justification with respect to the credit markets has been that the metrics which drive the fundamentals obviously are a little more slower moving than what you see in the equity markets. And if you look at where balance sheets are in terms of net leverage, the cash balances, et cetera, it is the cleanest going into a hiking cycle. But the debate here is, or the tension here is just going to be around the fact that the starting point is great, but the pace at which things are going to change is also going to be kind of extraordinarily aggressive. So to that extent, the credit market doesn't have a problem right now in terms of fundamentals, but there is a lot more uncertainty with respect to the future, and the valuation problems to some extent is being solved for, given the magnitude of the moves that we have seen over the past month or so.
Let's talk about the future, Jack. Michael Hartnett over at B of A wrote this morning: with bearish tech, stocks, credit, the next 6 months, rate shock morphs into a recession shock. Where are you on that now, Jack? Does any of that resonate with you?
You know, I certainly think that as we move through this year, you're going to see more pressure on what I would call the tails of the market. On the secular growth side, higher interest rates, more pressure on valuations, slowing earnings growth, and what you've certainly seen is some earnings news which points to a normalization of spend on the part of some of the secular growth names actually cutting into their earnings estimates. On the other side, if we start getting slower growth, some normalization, I do think you're going to see some pressure on the deeper cyclicals. And so ultimately, I think the core of the market, higher quality, is where it wants to be from an investment perspective. But I would also say when we look at volatility overall, this year is probably going to be traders' paradise. There's just going to be volatility, whether it's in yields, whether it's going to be in credit, whether it's going to be in the equity market, and nimble positions are going to be able to trade around that, and I think they're going to be adding value as well. So it's either stay the course, true to your terms, or look for where markets are overreacting and trying to be contrarian.
You know we're going to use that line on Traders Paradise on repeat through the rest of this year, don't you, Jack? That's perfect. Jack Caffrey's going to stick with us alongside Sri Sankaran and Jill Carey-Hall. Coming up, the morning calls, and later, shale giants pledging to limit production hikes even as crude edges towards triple digits. Pioneer on Bloomberg yesterday. We get to 150, 200, it doesn't matter. We're not going to move. We'll talk about that next. From New York, this is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Minutes away from the opening balance. This session grows older, this bounce fades. The overnight bounce is gone. The S&P 500 unchanged. Similar move on a Russell. The Nasdaq up by just about 0.2%. That's the equity story. Here's the bond market picture. Yields coming lower through this morning. 10's down by 2, off by almost 3 now to 193.55. You can call it just about 194. That's the price action here. The morning calls. Let's get straight to it with Pivotal Research downgrading Roku to a sell, expecting slower revenue growth amid increasing competition and a weakening global economy. Barclays cutting its price target on Intel down to 45. They trimmed their estimates following lackluster commentary at an investor meeting. We're down there by 2.8%. Finally, your third and final call from Raymond James, upgrading Fastly to a strong buy, seeing an attractive buying opportunity after recording its biggest one-day drop on record on Thursday, up now by almost 3% or so. Coming up, Pioneer, Devon Energy, among shale giants that are not looking to pump more crude.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds away from the opening bow this morning. Good morning to you all. We're almost there. A long weekend in the States just around the corner. Futures are unchanged on the S&P. They were positive overnight off the back of a scheduled meeting between Secretary Blinken and Minister Lavrov. The tone since then, we've unwound a lot of it. Unchanged on the S&P, just about positive on the NASDAQ. There's the opening bow. Switch at the board and get to the bond market. 10-year yields come in 2 or 3 basis points to 193.72. Euro dollar 113.46. We're negative there, a tenth of 1%. In about 90 minutes from now, we'll hear from President Williams of New York, then on to Brainerd later on this afternoon. The Fed speak front and center for a lot of you I know. Curious this one, crude, 89.47, a break in 90 to the downside, negative 2.53%, call it negative 2.5. On the week, the biggest weekly loss of the year so far. And let's be fair, a weekly loss for crude right now is tremendously rare. At the opening bow, then about 30 seconds in, we're just about positive on the S&P by almost a tenth of 1%. Energy, the big loser this morning, down by a little more than 1%. Information technology, getting a bounce, a kick higher from yesterday's big losses, up 0.4 of 1% on IT. Let's get you some movers. Let's get to Abby.
Hey, John. Well, the earnings season continues on, even though perhaps less well-known names. But one big name is helping that S&P 500 with that fractional gain. And I'm talking about Deere. Shares are popping higher after they put up a very big beat. And more importantly, actually, now the stock is lower. That's interesting because it had been sharply higher, but now trading lower. It was a great quarter, though, and they boosted the outlook again, once again, on farm demand. We'll have to be looking into what's causing that turnaround, that decline to the downside. It could be some of the other earnings movers, maybe the sentiment. It's hard to know. In terms of some technology names that are moving to the downside, let's take a look at Roku, absolutely plunging. They missed and their outlook disappointing, blaming it on the supply chain, which is interesting given the fact that only 19% of their revenue comes from goods sold. Shake Shack down 13%. They put up an ugly quarter, huge miss, the outlook disappointing, and their guidance really is signaling trouble ahead to some. And then finally, DraftKings, also another ugly name here. Users fall short. Their forecast is for a loss. They're not seeing a profit until 2024. So overall, a little bit of a rough day for these earnings movers, and I will be looking into Deere and what caused that turnaround. John.
Abby, thank you, and we'll touch base with you before the show on that too. Thank you very much. 2 minutes in, taking a look at crude as well. Brent right now, 91.17, WTI, 89.59, heading for the first weekly decline in 2 months. Katie Lines, it has been a while.
It has definitely been a while, and there's a lot of
stories playing into this, shall we say, especially on the geopolitical front. On the one hand, we continue to monitor risks around the Russia story and energy output from that big oil producer. On the other hand, there is the issue of Iran and the potential return to a nuclear deal and more supply coming onto the market from that country. So it's a lot to weigh. Obviously, crude moving to the downside this week, but we have to consider how far we have come already in 2022. We started around $75 a barrel on WTI. We're now in and around 90, up about 20% year to date, and it's really across the energy complex. You have natural gas futures up about 24%, and all of that adds up to big gains for the energy sector as a whole. It is far and away the best performing in the S&P 500 this year, up about 22%. So oil prices helping energy companies, but it is energy players that are also propping up oil prices in that they are still keeping supply constrained even in the face of this demand recovery. We know OPEC Plus has been very slow to add barrels back onto the market, maintaining that steady 400,000 barrels a day increase every month. But it's not just about the cartel, it's about this shale patch as well, which actually the U.S. was the largest oil producer in the world in 2020, about a 20% share. And it used to be a drill baby drill story when it came to shale, John. A lot of investments in production, pumping more crude, more production capacity, but that has now shifted to a story of discipline, controlling costs, returning capital to shareholders. It's less about pumping as much as you can. The question really surrounds how long that is going to be the story if we see oil prices continuing to climb. What happens if we hit triple digits? Is it just too enticing to start drilling more, John?
Kelly, thank you. And can I just say, wonderful interview yesterday. Just fantastic. Thank you so much for that. Alongside Guy Johnson, with the Pioneer CEO. Take a listen to what he had to say about crude. 100, 150, 200. What would bring him back?
Regardless of whether it's $150 oil, $200 oil, or $100 oil, we're not going to change our growth plans. Even if the president wants us to grow, I just don't think the industry could grow anyway.
Back with us, Jill Kerry-Hall, Jack Caffrey, Sri Sankaran. Jack, first to you. You talked about the cyclicals briefly. Energy's been a massive winner for this year. Is that music to your ears when you hear someone in a shale patch saying, I don't care what it gets to, 150, 200, we're going to be disciplined?
This is an industry which has historically struggled with its discipline. And so to the extent that they continue to talk discipline, that's a very powerful statement. They also recognize that there's been tremendous pressure on, if you will, eroding demand growth into the future. And to the extent if you were in the political sphere, higher prices actually might encourage people to make that transition that much faster. But they also, I've had some concerns if we've had a labor force that could have a housing boom, an infrastructure boom, and would you have workers for energy? I think what you're hearing from the energy companies is we don't want to incur higher costs at this point in time. And I think lastly that there's some concern how much of this current oil price that we've seen has got a geopolitical bid to it, and that could ease. I think when you look at that gap between oil prices and natural gas prices, it suggests that there's some larger than usual amount of geopolitical risk in the oil market, which isn't in some of the more domestically oriented energy sources such as natural gas.
So even if we do strip out the energy conversation for a moment, and Jill Kerry-Hall, we just talk about prices and where the pricing power is, your world, the small caps, do you think there's more pricing power there than what you're seeing maybe concentrated in the S&P 500?
Yeah, surprisingly, when we've looked back, historically, small caps have fared very well in periods of elevated inflation. We've seen that their margins have surprisingly been less negatively correlated with some of the inflationary forces like labor and CPI than large cap margins. And we've continued to see that show up in recent earnings seasons. So when you look at the mentions of pricing power on earnings calls, you actually saw more positive trends mentioned by small cap companies than large cap companies. So yeah, I think this is a space that we continue to like, that we are expecting inflationary pressures to ease as we move throughout this year. But certainly labor is something that has been a risk, especially to more labor intensive areas of the market. So pockets of consumer, pockets of industrials and healthcare. For the S&P 500, consensus is expecting that we could see a return to record margins this year. So that looks a bit optimistic to us and is one of the reasons we've been below consensus on earnings.
I think you're not alone. I think that's looking optimistic for a lot of people. Sri, we're looking at higher costs, maybe higher energy costs. We're looking at higher interest rates as well. Sri, I've been looking at the work you've been doing, and it's tremendously detailed. So forgive me that we've only got a few minutes to work through this. Just on interest coverage ratios, and typically how they respond as interest rates start to climb, how credit performs in a typical rate hiking cycle, and how typical this one isn't. Sri, can you run us through it?
Yeah, I mean, I'll try to be very brief. So the historical precedent of the playbook has been that coverage ratios do not really deteriorate early in a hiking cycle. So the logic here is that you do get that earnings momentum offset some of the increase in interest expenses. And that's why in the early part of a hiking cycle, what we have seen historically is interest coverage ratios improve, even for the leveraged loan market, where it's floating rate liabilities that we're talking about. What is different this time around, though, obviously, is the fact that, yes, the coverage ratio is probably for the loan borrowers, it's not really as high as it was kind of at the beginning of some of the earlier cycles, but it is a very healthy number that we're looking at. The key issue here is going to be the pace of rate hikes, and it's not necessarily around how quickly interest expenses go up. It's more to do with the fact that when do they start acting as a drag on earnings growth? And the concern here is that because you're looking at a Fed that's trying to control inflation, do they compromise on the growth outlook and create more uncertainty around the earnings outlook? I think that's the key when we're thinking about how coverage ratios evolve in this cycle.
When you think about that internally around the table at the moment, Sri, have you come to a decision, a base case with any confidence whatsoever?
No, a lot of debates, but I think it's still, what we are comforted by is the fact that the starting point is healthy. What we're debating is kind of how much of a balancing act the Fed can pull through. And to some extent, it feels like it's a little early to kind of conclude that corporate balance sheets are going to go through a significant downturn just yet. But we are aware that we can't just stay confident because of the starting levels being healthy. And there is also the nuance around, there's more debate around what the impact on the tail cohorts is going to be, because the portion of the market that is kind of over leveraged and has relatively low coverage ratios, that is also kind of still on the higher end, which is why I think the point would be that you need that earnings related healing to come through. And we haven't really kind of come to a strong conclusion just yet. There's just more uncertainty for sure.
And that's where we are in this market. And that honesty, that transparency of those conversations at the moment is why a lot of people are finding it difficult at the moment to put money to work. Jack Caffrey, one way people have looked to protect themselves against higher interest rates, quite naturally, is just to buy the banks. The banks have done quite nicely year to date on the S&P 500, up about 4%, maybe not the gains you might expect. You talked about pulling back from the cyclicals. Let's talk about the winners of the year. Certainly not IT. Jack, it's been the banks, much more so in Europe at times, and it's been energy too. Can we sit on the banks just for a moment, Jack, and get your thoughts?
You know, I do think the banks are clear beneficiaries of higher long rates. And so to the extent that we are going to see the Fed try to engineer a yield curve shift, and I think the emphasis might be try to engineer a yield curve shift to try to indicate that they have better control over inflation, then I do think the banks continue to work. I think the challenge is going to be, to the extent higher rates impact the housing market, and the housing market is a key driver of bank lending, the extent you don't really have a lot of corporate borrowing as of yet because of inventory problems, you just can't actually incur the inventory. The loan growth, I think, is going to be the question, and loan growth is probably going to be tied back to corporate and consumer confidence. And so ultimately, banks work, and they have yield, and they are doing the right thing, and they are well capitalized. But I do think that they're going to be, to some extent, a leverage play on confidence.
Jill, final word on that, just on the banks, please.
We've been overweight financials within both large caps, and then they've ranked favorably in our small cap work as well. I mean, I think they also fit what's another theme we think is going to work really well within the market this year, which is quality. I mean, typically high quality stocks with stable earnings, which financials has become an increasingly higher quality sector post-crisis. Those types of stocks are what works when you see the Fed tightening, when you see volatility pick up, when you see profits growth decelerate. These are all backdrops where quality works. And so within large and small caps, we would stick with an overweight on financials.
Jill, thank you. As always, Jill Carey-Hall of Bank of America, Jack Caffrey of JP Morgan, and to Sri Sankaran for condensing, hours and hours of research on credit into about 2 minutes or so. Sri, thank you. As always, buddy, thank you very much. Your equity market's down about 0.2% on the S&P, 12 minutes into the session. Some big movers, Abby, to talk about just after the opening bell. Let's do that now.
Big movers indeed, John. And one of them is Roku. Shares absolutely plunging down more than 20%, headed to the worst day ever since this company has traded publicly back in 2017. And it's interesting, they beat on profits, but they put up a 3% miss on sales. They also gave a disappointing guide. They're talking about issues with the supply chain. This is interesting only because 19% of their sales is from goods, whereas the rest is from programming. So it's hard to know how programming is affected by the supply chain. But in any case, the street is pretty bearish on this. We have some downgrades. Pivotal Research is now at a sell. They're saying that the bearish view reflects an increasing competition, a potentially significant weakening global economy. So there's a bit of a macro call there too. MoffettNathanson already at a sell. So a bearish day for Roku here. Not entirely surprising in some ways though, John, because ahead of today, this stock was already down more than 50% from its peak. So some investors were aware that there's weakness here. And it's really not even a bearish situation here from a short position, about 4% of the shares short. So just a brutal situation here for the shares of Roku, John.
It's a struggle in the early part of this morning. Abby, thank you. Coming up, Hong Kong, a struggle also, battling to get its COVID-0 strategy back on track.
In Hong Kong in early March, we'll most likely have many tens of thousands of infections.
That's next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Hong Kong in early March will most likely have many tens of thousands of infections. I wouldn't rule out hundreds of thousands of infections that could be detected by this mass testing exercise. Where would those people go? Where would the cases be put? Because we simply don't have isolation facilities for that many people.
Hong Kong continuing to grapple with surging virus cases. The chief executive of Hong Kong, Carrie Lam, planning mandatory testing for all residents as China's COVID-0 strategy upends its return to normalcy. I'm going to bring back in Mike McKee for more here. Mike, we're testing all residents. That's 7.5 million people. It's a lot of people, a lot of work. Would you say, here's a part of the world that's a few months behind where Europe and the US was with this, and deploying a very, very different strategy?
It's more than a few months behind, John. You take a look at the chart, and it looks like Hong Kong is where New York was or Wuhan was when the whole thing first started. Nothing, nothing, nothing. And then all of a sudden, this gigantic jump up. And that's what Hong Kong is trying to deal with right now under the strictures of China's COVID-0 policy. So they're going to have to make some decisions about how to do this. As you mentioned, they're going to try to test everybody in the city next month. They've already got cases leaking over into mainland China, so they're getting pressure from the Chinese to try to do something about this as quickly as possible. But you heard the doctor, tens of thousands of cases could be happening by the time they get around to starting testing. Then you bring everybody together in one place, stand in line to get tested, and you've got some transmission problems there as well. So Hong Kong facing some real problems going forward. Where are they going to quarantine? The doctor mentioned, well, they're talking about having them in hospitals or hotels that are converted to hospitals for 7 days. Then if they test negative, they can go home and quarantine for the rest of the time at home. But this is going to be worse than Wuhan, they say, because there's so many people that have to be tested at the same time, and the cases are already spreading very quickly.
Mike McKee, thank you, sir. As always, that's a really important story to stay on top of. If you've been following the price action, you know what's been going on. If you haven't, let me guide you through it. Just a quick chart intraday of S&P 500 futures. You see the pop late last night on the S&P 500 yesterday evening. That pop came about because we scheduled a meeting next week with Secretary Blinken and Sergei Lavrov, the Russian foreign minister. This came from Ned Price, a State Department spokesperson, who said the Russians have proposed dates for late next week, which we're accepting. That meeting will take place in Europe. Gains, gains, gains. Then we started to roll over. And this report came from Interfax, which I'll try and translate for you in just a moment. Separatists in Donbass turned around and said children, women, and elderly people will evacuate to Russia due to what they called an escalation of conflict at the contact line. This came from a report from Interfax. We heard from the president of Russia a little bit later on. He went on to say that Kiev just needs to discuss the conflict with separatists. This was in a joint news conference with his counterpart in Belarus. The president of Russia said, I did not pay attention to invasion reports. Russia themselves, as you know, continues to deny any plans to invade Ukraine. But when those reports started to come out just a couple of hours ago, futures rolled over, turned negative. And here we are right now, unchanged on the S&P and negative on the NASDAQ. Let's get to Anne-Marie in D.C. Anne-Marie, can you translate those reports that came from Donbass separatists, according to Interfax, what that means, and whether we've had any response whatsoever from the U.S. administration?
So those reports from the leader of the so-called Donetsk People's Republic is about evacuating women and children from the region into Russia. Now, I believe TASS is also reporting, Jonathan, that President Putin thus far is unaware of this type of evacuation. But when you see a report like that, it does make you think, these are Kremlin-backed separatists, right? So it does make you think that there could potentially, or this could potentially be what the United States has said and been worrying about and flagging, that there could be a false flag operation. And we should note there is constant fighting in this region, although the last 24, 48 hours, the OSCE has said they've seen an uptick in that. So that's what I would say in terms of what is going on in eastern Ukraine at the moment. Jonathan, just one point. When you read that headline that President Putin said he doesn't pay attention to the reports about what the United States says regarding Russian build-out, I find that very hard to believe, given the fact you've seen his entire cabinet and administration come out and talk about that those reports are false.
AMH, a long weekend coming up in the United States. Over this weekend, as markets close on Monday, at least stateside, there's going to be some drills. Can you guide us through them, the kind of headlines, the stories you'd expect to read through the weekend?
Well, there are going to be drills tomorrow, and Lukashenko, the Belarusian leader, sat down with President Putin today, and they're going to be watching those drills tomorrow. I think it's important just to remember that these are technically military drills and exercises, and they do happen before. This is one of the biggest, though, we've seen joint forces between Belarus and Russia in Belarus, which geographically is concerning for Ukraine, because at the moment, what the United States is seeing is a buildup between 169 to 190,000